Page number 74. Page number 74 you take. We have multiple exemptions. Whenever you are writing whether a service is taxable or exempted, what is the notification number that you need to quote? Notification number 12 of 2017. As per notification 12 of 2017, the said activity is exempted. Like that you need to write. Whenever you are quoting that a service is covered under RCM, what is the notification reference you need to give? 13 of 2017. Here, the first area what we have is agriculture related services. So, in agriculture related services, we have only few exemptions now. Look into the first point. Any service in relation to agriculture or agricultural produce is exempted. So, that is you are doing agriculture. For that, I am providing some services, or you are having agricultural produce. I am providing some service in relation to agricultural produce. Now, I get some consideration that will become exempted. So, what is the service in relation to agriculture means? Like harvesting services, supplying farm labor, farmer training or seed testing, soil testing. These are all examples of service in relation to agriculture. What are service in relation to agricultural produce? Storage of agricultural produce, or processing that agricultural produce, packing that agricultural produce. All these are service in relation to agricultural produce. So, any service in relation to agriculture or agricultural produce is exempted. So, what is the meaning of agriculture? Agriculture means cultivation of plants and rearing of all life forms of animals except rearing of horses. So, therefore, cultivation of plants means all type of plants will be coming. Let it be food plants or other than food. For example, cultivation of flowers like floriculture. So, ornamental flowers, will it come under agriculture? Yes. Rubber plantation comes under agriculture? Yes. And teak wood plantation comes under agriculture? Yes. Ganja, weed, all these also coming under agriculture only. Okay. We will not see for what purpose we are cultivating that plants. So, cultivation of plants and rearing of all life forms of animals. For what purpose? For food. What is example of rearing of life forms of animals for food? Poultry, then cattle rearing, fisheries, that will come. Then for fiber, sericulture, silkworm farming for the purpose of extraction of silk, and even sheep farming for the purpose of extraction of wool. Then fuel, that is cattle farming, cattle rearing for the purpose of using the cattle to do the ploughing in the agricultural land. And then raw material, example this honeybee farming. Honeybee farming for the purpose of generation, extraction of that honey, which is a raw material, or any other similar products. So, rearing of all life forms of animals for food, fiber, fuel, raw material or any other similar products, but it does not include rearing of horses, because horses are no way connected to agriculture, that's why it is excluded. Then what about other animals? Not all animals are allowed for rearing. Those animals which are allowed for rearing, in that horses are excluded. Lion, tiger, elephant and all is not allowed for rearing and all. Okay. So, therefore, that is no way connected. Those animals which are allowed for rearing, in that except horses, remaining will be part and parcel of agriculture. Then agricultural produce means what? Agricultural produce means a primary produce out of agriculture on which no processing is done. Example, tender coconut is agricultural produce? Yes, because it's a primary produce out of agriculture. Then, or some process as is carried out by a cultivator which does not alter its essential characteristics. So, the tender coconut, they will dry it for some days, they remove a layer. So, husk, that is known as coconut. Even that coconut is also agricultural produce. Why? Because from tender coconut, when they peel off a layer, there is no pineapple, there is only coconut. So, which means there is no change in the essential characteristics. So, any produce out of agriculture on which no processing is done, or such processing is usually done by a cultivator which does not alter its essential characteristics. Now, to that coconut, they remove the shell. Okay. So, that is they dry it for some more days and they remove that shell. Inside we have copra. So that copra is also agricultural produce because there is no change in essential characteristics. That copra, if you extract oil, coconut oil, now it is not agricultural produce because the essential characteristics changes. So carrying out any process as is usually done by a cultivator which does not alter its essential characteristics but makes it marketable for primary market. Then is paddy agricultural produce? Yes, but rice is not agricultural produce. Why? Even though rice to paddy, paddy to rice, there is no change in essential characteristics, but this paddy to rice is not the process done by the cultivator. Usually done by cultivator only will be coming under agricultural produce, but paddy to rice is done by whom? Rice mills. Paddy to rice usually not done by cultivator, usually it will be done by rice mills, but exceptions will be there. Some cultivators will be making it, brown rice they will make from paddy to brown rice, but usually, that is the word they have given, usually who will be doing paddy to rice? By the rice mills. That's why rice is not an agricultural produce. As rice is not an agricultural produce, in relation to rice they have given few activities as exempted. Unloading, loading, packing and warehousing of rice is exempted. What about these activities in relation to agricultural produce? Anyhow it is covered under the first point, any service in relation to agricultural produce. Then why in the fourth point separately it is given? Because rice is not an agricultural produce, that's why for that separately they have given activities. What are the activities? Loading, unloading, packing, storage and warehousing of rice is exempted. Then artificial insemination of livestock is exempted. So through artificial process, the reproduction will happen through injections. So they will put injections to the cattle for reproduction, that is known as artificial insemination, for which whatever money collected, that is exempted. Then services by way of storage or warehousing of cereals and pulses. So these cereals and pulses, even though not agricultural produce, but its storage is exempted. What if it is agricultural produce? Anyhow it is covered under the first point, any service in relation to agricultural produce. Are you understanding? So storage of sugarcane exempted. Why? Sugarcane is agricultural produce, but storage of jaggery is not exempted. Why? Because jaggery is not agricultural produce, it is processed. Storage of fruits and vegetables exempted. Why? Because it is agricultural produce. Storage of tea and coffee not exempted, because tea and coffee is not agricultural produce. Tea leaves and coffee berries are only agricultural produce. Are you understanding this? So storage and warehousing of agricultural produce anyhow exempted, but cereals and pulses, even though it is not agricultural produce, it is separately given as exempted. Previously we had these goods, now it is omitted. Then warehousing of minor forest produce also. Minor forest produce like certain Ayurvedic herbs, shikakai, bamboo, lax, honey. So these are some goods which are available in the forest. This is not agricultural produce because no one is going there for cultivation. It is a natural habitat which is available in the earth. So that is minor forest produce. Its storage is also exempted. See the note. Warehousing of fruits and vegetables and other agricultural produce is covered in the first point itself, covered in one above. Already it is exempted. So what are the points that you need to remember in agriculture related services? First point, any service in relation to agriculture or agricultural produce is exempted. Second point, so in case of rice, loading, unloading, packing, storage or warehousing of rice is exempted. Third, artificial insemination of livestock is exempted. Fourth, service by way of storage or warehousing of cereals and pulses and minor forest produce is exempted. All other activities which was previously exempted is now omitted. Consequently, it will become taxable. Previously, we had fumigation of a warehouse in warehouse to keep agricultural produce was exempted. Now it is omitted, it will become taxable. Previously, slaughtering of animals was exempted. Now it is removed. So therefore, it will become taxable. Got it? So this is about the agriculture related services. Then look into the next area, insurance services. In case of insurance services, the following services are exempted. Number one, so there is a National Pension System, NPS Trust. This NPS Trust provides the life insurance service and collects the life insurance premium that will be exempted. Then second, group life insurance policies. So basically these group life insurance policies wherein there will be, like a group of people and who form the insurance scheme. Like even chartered accountants are having a group insurance called as ICI Benevolent Fund, like that. So any group of people, they can create an insurance fund for the common help of the others. Okay, so that is known as group life insurance. And not all group life insurances are exempted. Only group life insurance of Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces is exempted. Any other group insurance will be taxable. Then there is a general insurance company, so which is providing general insurance services under government notified schemes. What are the government notified schemes? Basically, these schemes are targeted to agriculture and farmers, below poverty line, women and infants. Even Nirmaya health insurance is exempted. For example, hut insurance scheme. Who will live in hut? Below poverty line. So whatever premium collected will be exempted. Coconut palm insurance for what? Farmers. So therefore premium collected will be exempted. So easily you can identify. The moment you see that insurance scheme in the question, check is it connected to agriculture and farmers or below poverty line or women, then it will become exempted. Even one more notified scheme is Nirmaya health insurance. Suppose if it is a insurance, life insurance services and notified by government, life insurance under government notified schemes. How the government notified schemes will be? The schemes will end with the words Yojana. Pradhana Mantri Jeevan Jyoti Bima Yojana, then Pradhana Mantri Jan Dhan Yojana, Vasishtha Pension Bima Yojana, like this Yojana and all, they will only keep. Private people will not keep the words Yojana and all. So therefore, this will be coming under government notified scheme which is exempted. Apart from that, what you need to remember is micro life insurance having a sum assured not exceeding 2 lakh rupees. What if it is a micro life insurance, but the sum assured is 2,50,000 rupees? Whether the premium collected will be taxable or exempted? Taxable. Only if it is a micro life insurance where the sum assured does not exceed 2 lakhs, it is exempted. Then, so government will be receiving insurance services. So there is an insurance company which will provide insurance service to government and receives the premium. That premium collected will become exempted. So insurance services provided to government. Then reinsurance of any exempted insurance service is also exempted. For example, there is one insurance company which is providing insurance service to government with respect to its airport. Now, if there is anything happen to that airport, the obligation on the insurance company is 400 crores. So to mitigate this risk, that insurance company will take reinsurance with another insurance company. As the main insurance is exempted, its reinsurance is also exempted. That is this. If the main insurance service A to E is exempted, its reinsurance is also exempted. Then one more point, business facilitator or business correspondent who is getting commission in rural area working for insurance company is exempted. Already we saw that in insurance agent services. So these are the various exemptions with respect to insurance services here. Okay. Then next, can I extend? So this banking services alone, after that we will leave. Okay, say this, banking and other financial services. Previously, services provided by RBI was exempted, but now we don't have that exemption. Any service provided by RBI or any service provided to RBI will be taxable. And only in one case, it will come under RCM. What is that? Overseeing Committee Services to RBI. And what about import of services? Anyhow, import of service will be coming under RCM. So, remaining cases, it will be FCM. What you need to remember is only 2 points. Point number 1, any service provided by RBI or to RBI will be taxable. Is it clear? Second point, import of services and overseeing committee service to RBI is RCM. Rest and all will be FCM. Then, transaction in money for a separate consideration, without consideration. If transaction in money is without consideration, it is neither goods nor services. If transaction in money is for a separate consideration, it will be treated as service. If that service is by way of interest or discount, means If they are getting interest or discount on loans, advances, deposits, it will be exempted. Suppose if they are getting any other consideration means what? Processing fees or documentation fees or NEFT charges, RTGS charges, debit card charges, credit card charges, minimum balance, non-penitence charges, all those charges including interest in credit card will be taxable. Generally interest is exempted, but the interest on credit card will be taxable. Then services provided by a banking company to basic savings deposit account holders under Pradhan Mantri Jan Dhan Yojana. So under PMJDY scheme, lot of nil balance accounts are opened by the banks for below poverty line people. So these bank accounts are called as basic savings deposit accounts under Pradhan Mantri Jan Dhan Yojana. To these account holders, if bank provides any services, that will become exempted. Then foreign exchange transactions carried out by the banks. So between banks, between foreign exchange dealers, between banks and foreign exchange dealers, if there is any foreign exchange transaction, that will be exempted. However, when it will become taxable? Only between bank or forex dealer and the customer, then only it will be taxable. Then next, services by an acquiring bank to any person in relation to settlement of an amount up to 2000 rupees. What is this? Generally, whenever the payments are made through card transactions, there will be some processing fee which will be collected by the acquiring bank. For example, you go to a shop, you will make the payment through your card. Now, there will be one POS device, point of sale device. This point of sale device will be supplied by one bank. That bank is known as acquiring bank. What that acquiring bank will do? Will take money from your bank account and they will be crediting the money into vendor's bank account. For doing this settlement, this acquiring bank will be getting a processing fee. That processing fee collected by this acquiring bank will be taxable. However, on that processing fee, there is exemption if the transaction amount does not exceed 2000 rupees. Are you understanding? For example, you are purchasing a product for 1000 rupees. When you purchase a product for 1000 rupees, you swipe your debit card. Now, full 1000 rupees will be credited to the vendor? No. There will be some 1% processing fee that will be deducted. On that 1%, is there any GST? No GST, because the transaction amount does not exceed 2000 rupees. What if the transaction amount is 3000 rupees? Now also there will be processing fee, but on that processing fee, GST also will be applicable. Here there is no exemption with respect to processing fee. Processing fee will always be there, whatever may be the transaction, but GST on processing fee will be exempted. How GST law can give exemption from processing fee? Only RBI should give exemption from processing fee. So GST is exempted on the processing fee, but all transactions there will be processing fee. But if the transaction is up to 2000 rupees, then the GST is exempted. That's what I have given. GST on processing charges for a transaction up to 2000 is exempted. Then this point already we know, business facilitator or business correspondent or agent of business facilitator or agent of business correspondent earning commission from the rural area branch will be exempted. Urban area branch will be taxable. In that business facilitator service to a bank is covered under RCM, but business correspondent is not covered under RCM. The next point you see, services by an intermediary of financial services located in a multi-service SEZ. So there is only one multi-service SEZ in India, that is Gift City. In that multi-service SEZ, there is an intermediary. For example, PayPal is a financial service intermediary who is located in Gift City, that is in Gujarat. Now, they will be providing services to their customers outside India by way of doing the back-end operations here, for which they get a commission. That commission earned by them will be exempted. Why won't it become export of services? In case of intermediary services, the place of supply will be location of supplier. So in case of export of service, supplier should be in India, recipient should be outside India, place of supply should be outside India. But in case of intermediary service, place of supply is what? Location of supplier, which is in India. So it will not become export of service. But even then there is some foreign exchange involved in this. That's why they have given exemption. Service by an intermediary of financial service located in a multi-service SEZ with IFSC status to a customer located outside India. Okay, and that too they are dealing in what type of transactions, currencies other than Indian rupees. And why it will not become export of service? Because intermediary services, place of supply will be taken as the location of supplier. That's why. So in our previous session, we have completed discussion up to banking and other financial services. So have a look into the next area, that is healthcare services, which is in page number 76. In this healthcare services, we have only two exemptions. Healthcare services by a clinical establishment. So healthcare services, we need to understand what is the meaning of healthcare services. Who provides that healthcare services? By a clinical establishment, authorized medical practitioner or paramedics, including ambulance service, is exempted. So what is the meaning of healthcare service? You can see that in the next page. Healthcare services is basically pre-treatment, treatment and post-treatment. Pre-treatment means what? Diagnosis. That is diagnosing a patient, whether the patient has any disease or illness, etc., like X-ray, scanning, MRI, CT scan, blood test. These are all coming under pre-treatment. Then treatment is curing, trying to cure the disease. And post-treatment, that is after the surgery or operation, the patient will be kept in observation. That is known as post-treatment care. For any disease, illness, injury, pregnancy, and in any recognized system of medicine. So not necessary that it should be only in allopathy. It can be in homeopathy, Siddha, Unani, and even Ayurveda, any recognized system of medicine. Is there any unrecognized system of medicine in India? Yes, we have. Reiki healing treatments and pranic healing treatments are not recognized system of medicines in India. So it will be given in the question itself as to whether it is a recognized system or not. But usually the recognized system of medicines are this Ayurveda, Siddha, then homeopathy. These are all called as recognized system of medicines, and including transportation in an ambulance. So transportation of a patient in an ambulance, either as a part of healthcare or not as a part of healthcare, because separately also ambulance service is covered. As a part of healthcare also it is covered. What is the difference? So if the hospital which is providing the treatment is doing the transportation of patient in ambulance, then it will be part of healthcare. If the hospital is not providing treatment, just to provide their ambulance facility for transportation, then it will be called as ambulance services, which is also exempted. So, but transportation of a patient in an ambulance is only exempted. Any other service of ambulance will become taxable. For example, one ambulance driver transporting the patient and drops the patient. On his return, he took some 5 people and he is returning. Okay, he collected each person 200 rupees. Will it be taxable or exempted? Taxable. That is not exempted. Generally, construction companies will be taking ambulance on rental basis. For what purpose? For the purpose of any accident, anything could happen in the construction site. Immediately the person should be taken to the hospital, for which they will take the ambulance on rental basis. So that renting of ambulance also will be taxable. Only transportation of patient in an ambulance is exempted, whether it is part of healthcare or not part of healthcare, but does not include cosmetic surgery, plastic surgery and hair transplantation. Why? Because these three are no way connected to health of a person. So cosmetic surgery, plastic surgery and hair transplantation is too much healthcare. Like if there is cosmetic surgery, that is not to cure any disease, and even hair transplantation is not to cure any disease. So due to that reason, it will be coming under healthcare service? No, it will not be healthcare services. Other than for restoring the body parts affected due to congenital defects, developmental abnormalities, injury or trauma. So what does it mean? That is, generally cosmetic surgery, plastic surgery and hair transplantation will not come under healthcare services. But if these are to carried out to restore the anatomy of body parts affected due to congenital defects, for example, by birth itself, there is a cleft lip for a baby, like broken lip. To rectify the defect, they do a cosmetic surgery. Is it coming under healthcare service? Yes. And then developmental abnormalities. During the growth, there is an imbalance in the limbs. So because of which the left hand to the right hand and the left leg to the right leg, there is some imbalance. So they will carry out a plastic surgery. Again, it will be coming under healthcare services. Then accident, a fire accident happened, and due to that fire accident, completely the skin is burned. So they carried out a cosmetic surgery. Will it come under healthcare services? Yes. Okay. So therefore, generally cosmetic surgery, plastic surgery and hair transplantation is not healthcare service. But if these are to restore the anatomy of body parts affected due to congenital defects, developmental abnormalities, injury or trauma, then it will come under healthcare services. And healthcare services provided by a clinical establishment, that is the wording. Healthcare service we understood. So definition we need to definitely remember. So what is the meaning of healthcare services? Pre-treatment, that is diagnosis, treatment, then care. For what? Any disease, illness, injury, pregnancy. In what system of medicine? Any recognized system of medicine. And it also includes ambulance services. But it does not include what? Hair transplantation, cosmetic surgery and plastic surgery. But these three, if carried out to restore the anatomy of body parts affected due to congenital defects, developmental abnormalities, injury or trauma, then it will come under healthcare services and carried by a clinical establishment. So, 1 second here. How to reduce the volume? Okay. So, if these are to carried out healthcare services by a clinical establishment. So, what is a clinical establishment? Any place where the healthcare service is provided is known as clinical establishment. It can be any place. It can be nursing home, it can be called as clinic, it can be super specialty hospital, it can be multi-specialty hospital. It will be coming under healthcare services provided by a clinical establishment. So, hospitals, nursing home, clinic or any other place where healthcare service is provided. So, by a clinical establishment, authorized medical practitioner. Who is an authorized medical practitioner? Any person with the requisite qualification. What is that requisite qualification? Usually minimum MBBS, and they are registered as the person with medical council. Then they will be called as authorized medical practitioner or paramedics. Even paramedic service is also exempted. Who are paramedics? Nurse, lab technician, physiotherapist, even the compounders who are working in the hospitals. Basically, these paramedics will assist the doctors. So, their services is also exempted. That is with respect to the first point. So, what is the first exemption? Healthcare services by a clinical establishment or authorized medical practitioner or paramedics is exempted. Previously, we had exemption with respect to cord blood banks by way of preservation of stem cells, but that exemption is now omitted. Consequently, it will be taxable. So, cord blood banks basically preserve the stem cells and for which they collect some money, and that is now chargeable to GST. It will not come under healthcare services. Then healthcare service in relation to animals or birds, that is veterinary clinic services. So, all vets will be coming under this exemption, which is like they are not required to pay GST. Then one more exemption we had in the past, that is service of common biomedical waste treatment operators. Basically, these people will collect the medical waste from various hospitals and properly dispose of that medical waste, for which they get some money from the hospitals. That money received by them was previously exempted. Now that exemption got omitted. Consequently, it will become taxable. So, these are the two exemptions that we have at present related to healthcare services. Then, is room charges, medicines, everything part of healthcare service is exempted? Yes. But for room charges, we have a special point. What is that? If it is ICU charges can be any amount. It can be ICU or critical ICU or neonatal intensive care unit. So, any ICU charges, it will be exempted whatever may be the amount. Suppose if it is other room charges, what is that? Usually for doing the surgery or treatment, they keep the patient in the ICU. Once the treatment is done, till the time the patient is discharged, there will be a recovery time. During that recovery time, the patient will be kept in a regular room. So, that room charges will be exempted if per day it does not exceed 5,000 rupees. If it exceeds 5,000 rupees, entirely it will be taxable. In all exemptions, remember, wherever we have exemptions, if that crosses the limit, entirely it will be taxable. We have many monetary limits based exemption. So if you cross that monetary limit, entirely it will be taxable. Only one place we have an exception, that is incubatee services. There is an incubatee who receives money for doing the research, for which up to 50 lakhs is exempted. If he crosses 50 lakhs, the excess only will be taxable, except in that place. In all other places, wherever you come across a monetary limit, if you cross that monetary limit, entirely it will be taxable. Then next, what about renting of rooms to inpatients in the hospital, food supplied to inpatients? Everything is part of healthcare service and it is exempted. So whether medicine sold to inpatients are exempted? Yes. So who are inpatients? Those who are admitted in the hospital is known as inpatients. Then who are outpatients? Those who come to the hospital for consulting, but they are not admitted in the hospital, are called as outpatients. And services provided to outpatients, only consulting fees is exempted, but sale of medicines to outpatients, sale of food to outpatients, etc. will become taxable. So then services provided by consulting doctors to hospitals is also exempted. Generally, some doctors will be working as freelancers in the hospitals. What they do is that they provide services to the hospitals, and hospitals will be in turn collecting money from the outpatient. For example, when you go to a hospital as an outpatient, you pay a consulting fees of 500 rupees. In this 500 rupees, the hospital will retain 200 rupees and they will share 300 rupees with the doctor. 500 rupees received by the hospital also exempted, and the 300 rupees received by the doctor from the hospital is also exempted, and there is no GST on that. That is this circular. Then generally, people who are not blessed with children, so will undergo IVF treatment, in vitro fertilization or assistive reproduction technology. So this ART or IVF are the treatments mainly to cure the infertility in the patients. So there is a disease here. What is the disease? Infertility. That's an abnormality. So to cure that only they receive the treatment. So will it come under cosmetic or plastic, or it will come under regular healthcare services? Regular healthcare services, due to that it is exempted. Service provided by way of ART or IVF to treat infertility is covered under healthcare service and it is exempted. Then generally, in case of dental doctors and all, so they will be doing root canal treatment. Is root canal treatment taxable or exempted? Exempted, because that will be part of healthcare service. After root canal treatment, they will put the cap. Either they can do the cement pack or they can put the cap. So usually cement packing and all will be free. They will not charge any amount. But this cap and all they will put, that is they will insert one cap to the teeth so that human should know that they have underwent the treatment. So this cap will come under cosmetic. Even any other implants, dental implants and all also will come under cosmetic surgery, and even braces, that invisible braces or normal braces will also come under cosmetic surgery, and that will become taxable. Okay, so just for example I gave you. So in exam, whenever you are coming across that point, so write it as taxable because it will come under cosmetic surgery. Won't it come under, so to restore the anatomy of body parts affected due to congenital defects, developmental abnormalities? No. So because it is not to restore basically, so it is a cosmetic surgery, purely cosmetic surgery, there it will become taxable. Then next, services provided by rehab professionals. Who are these rehab professionals? They are basically psychology experts, and they will not be doctors, but they are having this MSc as the qualification, MSc psychology, and these people provide basically counseling to the people. Okay, so this counseling or care what they provide in educational institutions or medical establishments or rehab centers. These three places are the primary place of work of them. Either they will be working in medical establishments, or they will be working in education institutions, or they will be working in rehab centers. In medical establishments, they will be providing services by way of counseling the patients who are undergoing the treatment or after treatment, etc. So basically in pregnancy also, a counseling will be provided so that when they go into the labor ward, their pressure should not shoot up. Also, if a person's leg or hand is lost because of accident, so they will be under a trauma. So to recover them from the trauma, they will be providing some care and counseling. That is the job of them. And if they are working in medical establishments, whatever money that they are earning will be exempted. Let the medical establishment be a government medical establishment or a private medical establishment, or it may be a trust-owned medical establishment. All cases it will be exempted. Whereas educational institutions, primary their role will be so to provide the counseling to the students who are undergoing any depression because of the result, etc. Even medical establishments and educational institutions can be registered as government, or it can be trust, or it can be a private one. But rehab centers will be exempted. That is, in rehab centers, what is their work primarily? Their work is to provide the counseling to the patients who are drug addicts or alcohol addicts, etc. or if they are under any mental depression. So for them, if they provide any service in rehab centers, that rehab center is owned by government or a trust, then only it will be exempted. What if the rehab center is owned by private person? Then it will be taxable. So that is the point you need to remember. Note, services provided by rehab professionals in private rehab centers is taxable. Services by rehab professionals in private rehab centers is taxable. That is not exempted. Then the next exemption that we have is with respect to entry tickets. There are few entry tickets which are exempted irrespective of the ticket price, and few entry tickets are exempted if the ticket price does not exceed 500 rupees. So in this case of irrespective of ticket price, total we have 9 entry tickets, that is 8 entry tickets we have. So you can see museum, wildlife sanctuary, tiger reserve, national park, zoo, like that we have a list. How to easily remember? Related to animals, 3. What are those 3 related to animals? Tiger reserve, zoo and wildlife sanctuary. These 3 related to animals: wildlife sanctuary, tiger reserve and zoo. Then 3 places. What are those 3 places? Museum, national park and entry to protected monuments. So total 6. Thereafter 2, that is 2 sporting events: FIFA Women's World Cup 2020 and AFC Women's Asia Cup 2022. But already these events are completed. So for those events I have given exemption, but I don't know whether this will be tested in exam or not, but it is there, that's why I discussed. So even if you are not remembering these 2 points, okay, but these 6 points you need to remember. So what are the 6 entry tickets which are exempted irrespective of the ticket price? So first, related to animals, zoo, wildlife sanctuary, tiger reserve. Then related to places, 3 places: museum, national park and protected monuments. Then ticket price does not exceed 500 rupees per person for few tickets, that is total 9 we have. In that 4 performance related. So what are the performance related? So theatrical performance, dance, musical performance and concert. These 4 are related to performance. So that is dance, then music, then concert and then theatrical performance. In the theatrical performance, we have these stage shows, all kind of stage shows, including the stand-up comedy will be coming under theatrical performance. And if the ticket price does not exceed 500, it is exempted. And next to 4 tickets is related to events, that is circus, award function, then pageant and sporting event. Pageant is beauty show. So circus, award function, pageant and sporting event. Sporting event can be recognized sporting event or unrecognized sporting event. But in case of cricket and all, definitely ticket price does not exceed 500, impossible. So usually ticket prices and all easily exceeds 500 if it is IPL matches or BCCI matches and all. So taxable. If it is any other sporting event where the ticket price does not exceed 500, then it will be exempted. Then last one will be planetarium. So any entry tickets to planetarium is exempted if the ticket price does not exceed 500. So these 9 tickets you need to remember. So what are the first 4? Related to performance: dance, music, concert, theatrical performance. Next 4 events: award function, circus, beauty shows and sporting events. Okay. Then 1 event, that 1 place, that is planetarium. Then these entry tickets are exempted if the ticket price does not exceed 500. Whether entry to cinema theatre, if the ticket price is 200 rupees, is taxable or exempted? Taxable, because cinema theatre is not given in this list. And entry to theme park, water park, etc., will it be taxable? Yes, whatever may be the amount, that is taxable, because we don't have any transaction here. Okay. What if these entry tickets, the ticket price exceeds 500, fully it will be taxable. The next one what we have is pension services. There are multiple pension schemes in India, so which is offered by private parties as well as government, but only government operated pension schemes is exempted. What are they? Atal Pension Yojana by central government and any state government operated pension fund is exempted. Basically what happens in pension scheme is that it is a combination of SIP plus SWP. SIP, that is systematic investment plan. Monthly we will be paying some amount till the maturity, and thereafter after maturity every month we will be getting some amount, systematic withdrawal plan. So that is the basic pension scheme. There are a lot of companies which are offering it, but only 2 pension schemes the monthly contribution collected will be exempted. That is Atal Pension Yojana, which is operated by central government, and same way any state government operated pension scheme, monthly they will collect some amount towards a pension fund, right? So that amount will be exempted. Then private pensions will be taxable. Private pensions, when they collect the monthly some amount contribution towards pension fund, that will be taxable. Then services by some specified organizations. These are the specified organization. If they provide any services and if they collect any amount, that amount collected by them will be exempted. So what are those organizations? ESIC, previously SEBI was there, now SEBI is omitted. So ESIC, Employee State Insurance Corporation. So basically they collect money from the employers for providing the health insurance to the workers who are working in the factories. So that money collected by ESIC will be exempted. Then EPFO, Employee Provident Fund Organization, who collect the PF contribution from the employer and employee, that contribution collected by EPFO is exempted. Even same way like how EPFO we have CMPFO. CMPFO refers to Coal Mine Provident Fund Organization, like how EPFO is for normal employees. For workers who are working in coal mines, there is another Provident Fund organization called as CMPFO. They will also collect the Provident Fund contribution, that is exempted. Then previously IRDA is there, but now it is omitted. SEBI and IRDA omitted, which means SEBI and IRDA is required to pay GST on the money that they are collecting. Then NCCCD refers to National Center for Cold Chain Development. If you want to establish any cold chain is a place where we basically keep the agricultural produce. So if you want to establish any cold chain, for the requisite assistance, you can make application to this NCCCD. So they will be providing the requisite assistance in establishing the cold chain, for which they collect some amount, that will be exempted. Then Foreign Diplomatic Mission. Who will be foreign diplomatic mission located in India? That is basically UN agencies. UN agencies, that is UNESCO, UNICEF, WHO will be coming under UN agencies. And thereafter we have embassy or consulate. Consulate basically provides visa etc. to visit their country, that is known as consulate, and embassy is to provide the cordial relation between two countries. So these embassies are established. So a lot of foreign embassies are there in India. When a foreigner visits India, and suppose if he faces any kind of issue in India, he can go to his embassy, like Russian embassy or Canada embassy etc. so that they will be getting the requisite support. Okay, so that is about embassies and consulates. So these people are called as foreign diplomatic missions located in India, and whatever money that they are getting will be exempted. Usually for giving visa they collect some money, right? So that money collected by them will be exempted. Then CMPF already we saw, NPS trust also we already discussed, National Pension System Trust. So these are the specified organizations. If they collect any amount, that is exempted. Then next, charitable and religious services you see. There is a charitable trust. That charitable trust is registered under section 12AA or 12AB of Income Tax Act. But not all activities of the charitable trust will be exempted. Even though they may be doing lot of charitable activities, but only specified charitable activities provided by them will be exempted. What are those specified charitable activities? Public health. So basically, if they provide any awareness, so about the public health, like a family planning awareness or HIV awareness or providing any treatment to the people, poor people. So all these are part of healthcare, like healthcare services anyhow. So therefore anyhow, if it is private also it is exempted. Even a charitable trust which is doing public health is also exempted. And then advancement of religion, spirituality and yoga. So all these Babas and Swamijis who will be earning crores and crores of money in the name of religion, advancement of religion, advancement of spirituality, even yoga, everyone will be covered under exemption. And even temples also will be coming under this case because they are under the advancement of spirituality. But the temple should be registered as a trust. Almost all temples will be registered as trust only. So due to that reason, any entry tickets which they are collecting or any amounts that they are collecting, so for certain special sevas and all will be there, right? So like VIP darshan or some other special puja, etc. For that they will collect some amounts. All those amounts will be covered under advancement of spirituality. Under that grounds it will be exempted. So what is the first charitable activity? Public health. Second charitable activity, advancement of religion, spirituality and yoga. Then educational program. And even there is one great Mahatma Parama Guru called as Swami Nityananda. You might be knowing about him. If you don't know also, Google about him, but certain videos you should not see. So, but otherwise, very great person he is. He earned lakhs and lakhs, and with that money he started one island. Now he is earning crores and crores of amount. Fully his life is with babes only. And whatever money that he is earning, he is not required to pay 1 rupee GST also. Okay. So therefore, if CA is not hitting out for you, try this. It's a very good plan B for you. Then educational programs. Even I am also thinking to become Tarunananda Swami. So educational programs to orphans, physically or mentally traumatized persons, prisoners or persons over 65 years residing in rural area. Educational programs to orphans, okay. Physically or mentally traumatized persons, CA students. Then prisoners, then persons over 65 years residing in rural area. Maybe after 65 years, so they may be having interest to learn something. So if they wanted to learn something and if they attend any classes for which they collect, like they pay some fees, that will become exempted. Okay. Definitely not DT classes and all. By the time DT portion gets over, they will die also. So 65 years residing in rural area. Then environmental preservation. So wildlife protection or environmental preservation, these are the only 4 charitable activities. Under these 4 charitable activities, whatever money that they are collecting, that amount will become exempted. Then services by a old age home run by central government, state government or a charitable trust. That is, there is a old age home which is operated by government or a charitable trust, and to whom they should be providing accommodation. People aged 60 years or more, they are only considered as old people. And what should be the consideration per month? Up to 25,000 per month per member, then it will be exempted. Definitely it will not cross beyond 25,000, it will be less than that only. So almost all old age homes will be exempted, but only condition is what? That old age home should be registered as either a trust or it should be run by central government or state government. Then service by any person by way of conduct of religious ceremony. So people who conduct the religious ceremony, they may be earning some money. So basically this Pandit, Purohit or church father, etc. They conduct the religious ceremonies. For that they will be collecting some amount. So that amount collected by them will be exempted, whatever may be the amount. That can be exceeding 40 lakhs, 50 lakhs. Sir, will they cross 40 lakhs, 50 lakhs and all? Threshold limit 20 lakhs only. So will they cross that 20 lakhs threshold limit? Easily they will cross here. Easily they will cross. Because now that there is nothing like that called season for marriage. 365 days marriages are happening. Okay. In season arranged marriage will happen. Non-season people will go to registrar office, and outside itself one priest will be sitting. Come, we will complete the proceeding. Time, all these things they will not say. Any time is good time only. Okay. So because they need money for one marriage function, minimum 15,000 to 25,000 rupees. So all days rainy season only in their place. Okay. So therefore easily 20 lakhs and all they will be crossing, and they are not required to pay any GST. Okay, at least they recite something and they are getting some money which is exempted. But these idiots are there in the name of Babas and Swamijis, charitable. So nothing, they will not speak also. They will sit in one corner and speak bullshit and they get money. So that is also exempted. Compared to them, this is okay. But teachers who take classes hours and hours, whatever little money we earn, on that also we need to pay GST. So intern, I am talking about you only, because intern the benefit you will only get, correct or not? When we pay GST, are we paying out of our pocket? Definitely no. We intern collect it from the students only, na? So therefore students should get benefited, correct or not? So we should fight for this. After CA we will think about it. So service by specified organizations for religious pilgrimages. So there are some specified organizations which will be conducting religious pilgrimages. What are considered as religious pilgrimages? Kailash Manas Sarovar and Hajj Yatra is considered as religious pilgrimage. For that religious pilgrimage, whatever money that is collected is exempted, provided that organization is a specified organization. Not every organization which is providing this religious pilgrimage will come under exemption. First, it should be a specified organization, and second, it should be a religious pilgrimage. Then whatever money collected will become exempted. That is with respect to charitable and religious services. And education services. Education services is the sector where so far you have invested your parents' money. So whether you are getting return or not, we should wait and see. So see the first point. Go to fifth point first. Fifth point, services provided by an educational institution to students, faculty and staff. Any service provided by educational institution to its students, faculty, staff is exempted. So that need not be education, because nowadays education alone is not provided, but else and all will be provided by education institution. So they will be collecting money in the form of bus fees, they will be collecting money for extracurricular activities, co-curricular activities, library fees, etc. So I am paying 10,000 rupees per annum to my 3rd standard studying son as library fees. So I don't know which library he is going and reading books and all. So that library fees is also exempted. And all the amounts which the school collect by whatever name called. So ID card issuance charges, book charges, uniform charges, shoe charges, slipper charges, innerwear charges, everything will be coming under exempted. So any service provided by education institution to students, faculty and staff. Sir, what is this faculty and staff? Why they collect money from faculty and staff? Simple. Some colleges and all, if you see, they will identify one good forest and they will construct one college over there. And to that college, no bus facility, only their bus will be provided. So staff and faculty also forced to go by that bus only. Normal bus and all will not be available. And they should give free enough for faculty and staff. No. Commercial is commercial. So they will collect money from faculty and staff also. That is also exempted here. Then what is the meaning of an educational institution? Category 1 education institution up to 12th standard is category 1. 12th standard or equivalent. In Kerala, Tamil Nadu, 12th standard is part of school. Whereas in some other places, 11th and 12th is not part of school, that will be called as college. But even then, up to 12th standard will come under category 1 education institution. And it can be any board. It can be state board or central board, ICSC, IB, or tomorrow AB also will come. Alien board, like that they can start. So all these boards will be coming under this category 1 and the fees collected will be exempted. Category 2 education institution. Education for obtaining a qualification recognized by law. So that is all graduations, post-graduations, professional qualifications will be coming under category 2. But very importantly, that qualification should be recognized by law. So whether this ACCA, CMA US, CPA, etc. are qualifications recognized by Indian law? No, it is not at all recognized by Indian law. So due to that reason, even if those foreign institutes come to India and collect some fees from them, will it be taxable? Yes, definitely it will be taxable and they are required to pay GST on that. So what about CA institute collecting fees? Exempted. Why it is exempted? Because CA is a qualification recognized by law. Okay, and whatever fees that is collected by CA institute is exempted. Then why private coaching centers which are collecting fees will be taxable? Are private coaching centers authorized by ICA to provide the coaching? No. Tomorrow when you complete CA, definitely you will complete. So in that, whose name will appear? THARUN'S IDT faculty name will come. Definitely will not come. Whose name will come? ICA name will come, which means these are all basically tuition centers. So where you pay money, that will be always taxable. Even up to 12th standard also, when you attend any tuition, the tuition fees will be taxable. Only thing, these tuitions will be run on an unorganized manner. So no one will know that there is a tuition center there. And lot of teachers will be running these tuition centers and collecting the fees in cash. So they will not be paying GST and all. But otherwise, literally they need to pay GST if they run it on an organized manner. So like that, even category 2, there is a institution which is permitted to give the qualification. Then that institution collecting fees will be exempted. That's the reason why registration fees collected by ICI, exam fees collected by ICI will be exempted. Even the same way with colleges. Colleges are basically affiliated to universities. So which means they are recognized for providing the qualification. So in the graduation certificate, that college name will be coming, even though it's a private college, but the college name will be coming, which means they are empowered to give the qualification. So therefore, the fees collected by colleges will be coming under exempted. Then category 3, approved vocational education. Approved vocational education refers to skill-based courses. So these skill-based courses basically like a lot of ITIs and ITCs are there, industrial training institutes or industrial training centers, which are affiliated to this NCVT, SCVT. Basically their job is to provide certain skills in designated trades under Apprentices Act, like plumbing, electrical works, then carpentry. So lot of skills they will be providing, and these people basically are not qualified, but they go for organizations like factories basically, and they will work as foremen, workers, supervisors, etc. And that's where they don't want any degree, but these are basically diplomas, polytechnic colleges like that you would have heard, that will be coming under approved vocational education. All these 3 are called as educational institutions, and the fees collected by them, by whatever name called, it will become exempted. Now, a student, even before joining the college, as a student will be paying some fees to the college as application fee, prospectus fee, etc. So whether that is also exempted? Yes, that's where we have one CBIC circular, application fee for entrance, or fee charged for issuing eligibility certificate, or fee collected for issuing migration certificate to ex-student. So they are leaving the college, then also they will be charged with some fee for giving migration certificate, transfer certificate and all. All those amounts which are collected by the education institutions, even though from the ex-students or from the students who are yet to join, that also will be exempted. This is the latest circular that is given by CBIC. Then, so far what we have seen is services provided by educational institution. Now we are going to look into services provided to educational institution. Means in the previous case, education institution is the supplier. In this case, education institution is the recipient. Now, what are the service provided to education institution which is exempted? So you have to remember it in 3 points. Point number 1, transportation of students, faculty and staff, catering service, security and housekeeping service provided to category 1 education institution is exempted. What if it is provided to category 2 or category 3? Then it will become taxable. For example, there is a housekeeping agency which provided the housekeeping services to a college. Now they collected some money. Whether it will be taxable or exempted? Taxable, because college will not come under category 1 education institution. So what is the first point? Transportation, security, housekeeping, catering. These 4 to category 1 institution. In case of security and housekeeping, remember that it should be within premises. If it is outside the premises of that education institution, then it will become taxable. Within premises, within premises. So what does it mean? Say for example, there is a school which is conducting an annual day function in one private auditorium. So to that auditorium, they received housekeeping service and security services. Now, even though it is service provided to category 1 education institution, but is it within their school premises? No, it is in other premises. Due to that reason, that service will become taxable. What if catering service is provided in that auditorium? A school which is conducting annual day function in auditorium, and for that auditorium, if the catering service is provided, will that become exempted? Yes, because catering there is no restriction. It can be within the premises or outside the premises, but security and housekeeping should always be within the premises. Then, second point what you need to remember is admission to or conduct of examination. That is, you are acting as a marketing person by way of bringing admission to the education institution, or you are setting the question paper or evaluating the answer sheets or giving your place on rent for conducting the exams, all these are conduct of examination. But this is exempted to all three category institutions, that is category 1 or category 2 or category 3, all three category institutions it will be exempted. Then number 3, online periodicals and journals. With respect to online periodicals and journals, only for category 2 it is exempted, because category 1 do not read any periodicals, journals. Category 3 also will not read. If they are able to read, why the hell they will go for this ITIs or skill development and all? So they will come for regular college itself. So therefore, basically these online periodicals and journals is required only for which category people? Only for category 2, and that will become exempted. So what are the 3 points that you need to remember? Come on. Transportation of students, faculty and staff, security and housekeeping services, then catering services to category 1 institution is exempted. Then second point, admission to or conduct of examination of all three category institutions exempted. Then online periodicals and journals only to category 2 institution is exempted. And then we have next point, if they collect some entrance exam fee, that is certain education institutions will give admission into the institution only if a student passes or qualifies the entrance exam. So they will conduct some entrance exam and then only they will shortlist the students into the college. So now in this case, for conducting the entrance exam, they will collect some fees. That fees collected will become exempted, even though they are not the students yet, because only after they qualify entrance exam they will become students, but even then it will become exempted. Services provided by an education institution by way of conduct of entrance examination against consideration in the form of entrance fee is exempted. Now there are some education like exam boards which objective is only to conduct the entrance exam and give the ranks. Based on that ranks, the students will be getting admissions into various colleges. For example, NBE, National Board of Examination, will be conducting IIT exams and even NEET exams, etc. But they will not provide any qualification. They will not provide any education. Their job is only to conduct the exams and they will give the result, that is score, rank. Based on that rank, the student can go and join in any colleges which is accepting their rank. Okay, so which means these examination boards are not education institutions per se, because they are not offering any qualifications. But CBSE circular says that even these central and state educational boards, which job is only to conduct the examinations, will also be coming under education institution. So therefore, the entrance exam fee collected by them will become exempted. Then second point, next point, amount paid to training providers under Deen Dayal Upadhyaya Grameen Kausalya Yojana. Under this DDUGKY scheme, what will happen? There will be some volunteers who will be called as training providers, who go to villages and will be providing various training into various skills like paper cup making or this straws which are made out of this coconut leaves. So using coconut leaves they will make the straws, and using the waste leaves they will make the cups, plates, etc. and all. So these kind of skills. Then tailoring skills or this leather products making like wallets or purse making or handbag making skills. So these skills will be taught to those people in rural area, so that they will become either self-employed or they will be going for some jobs based on the certificates what they get. So these training providers who go to the rural area and provide the training will be collecting some money from government under this scheme, Deen Dayal Upadhyaya Grameen Kausalya Yojana scheme. So that money collected by them will become exempted. That is about this point. Then next, there is a National Skill Development Corporation, so which will basically provide certain skills, functioning skills for the people, so that they will become employed even though they don't have prior knowledge. For example, data entry and then stock market training and GST certifications, thereafter basics of accounting, like that. There are a lot of skills which are provided. So by this NSDC or Sector Skill Council or any person approved by this National Skill Development Corporation or Sector Skill Council called as assessment agent or training partner. So these 4 people basically provides skill training to people, like to various uneducated people or unemployed people, etc. So whatever fees that they collect will become exempted in relation to any notified program, course or scheme by the above is exempted. Then next point you can see in next page, page number 81, there are Anganwadi schools. These Anganwadi schools basically provide daycare to children, and these daycare schools, Anganwadi schools, are operated by government. So in that schools, afternoon lunch, afternoon food will be provided by these schools. So they will not cook the food, but there will be one caterer who will be supplying food to these Anganwadi schools. Whether the catering service supplied to these Anganwadi schools is taxable or exempted. Where does Anganwadi schools come? Under category 1 education institution. So therefore, catering service provided to these schools is exempted, because any catering service provided to category 1 education institution is exempted. So see that exemption of GST is provided to services supplied to an education institution, including Anganwadi, which provides preschool education by way of serving food, including midday meal scheme sponsored by government irrespective of funding, because any person can make the payment. The payment can be made by government grants or can be made through corporate donations. The person who is making the payment is not relevant here. To whom we are providing the services is only relevant. So therefore it will become exempted. Then training in recreational activities relating to arts or culture. So there are some dance schools or martial arts schools or various arts schools are there. So these art schools or culture schools which will be teaching languages, customary practices, Vedas, Upanishads, etc. So these people are exempted provided they are individuals. Suppose if there is a dance school which is a partnership firm and collect some fees for providing training in dance, whether that money collected by them will be taxable or not? Yes, because only if the training is by individual in arts or culture, then the fees collected will be exempted. Same way, there are some sports academies. These sports academies will be registered as a trust. Then only the fees collected by them will be exempted. What if the sports academies are not registered as trust? Then the fees collected by them will become taxable. For example, MRF Cricket Academy, which is the well-known cricket academy in India, wherein lot of players are from that cricket academy only. The fees that they charge will be per annum 4 lakhs, like that they will be charging. Whether it is a charitable trust? No. So the 4 lakhs whatever collected will be chargeable to GST? Yes, it will be chargeable to GST. What if that cricket academy is registered as a trust? Then the money collected by them will become exempted. So for arts and culture, what is the condition? They should be individual, and if it is sports, they should be registered as a trust. Then next, services by assessment bodies under skill development initiative scheme. So skill development initiative scheme, so what will happen is that, so there is a big gap between what industry needs and whatever is taught by these polytechnic colleges or ITIs, etc. Because still many ITIs are teaching the kids like how to operate a lathe machine, extrusion machine, etc. But on the other hand, in manufacturing sector, they stopped using mechanical machines. They are going for this CAD, CAM and robotics and all. So therefore, these people will learn how to operate a machine, manual machine, and they go and they will not get a job. So therefore, there is a big gap between what industry needs and what these people are learning. So to bridge that gap only, government has created skill development initiative, wherein people from the industry will review the curriculum. Is this curriculum proper in today's scenario? Whether it can be imparted to the students. For reviewing this curriculum and giving the suggestions, these assessment bodies will be paid some amount. That amount collected by them will be exempted. Okay, so that is about services by assessment bodies under skill development initiative scheme. So these are the various exemptions that we have with respect to education services. Then services provided by government. In the services provided by government, when we are referring to by government, we are talking about central government, state government, local authority or union territory. So these activities are broadly divided into two: specified activities and other activities. Specified activities will be covered under supply. All other activities are excluded from supply. What are the specified activities? Department of Post, transportation of goods or passengers, airport or port services, and services to business entities. These are the 4 specified activities, and all other activities of government will be excluded from supply. You can also write it as exempted in this place. Either you can write it as excluded from supply, or you can also write it as exempted supply. So both are correct only, but the perfect one will be excluded from supply, but in the notification it is also given as exempted supply. Now only these 4 activities are covered under supply. In these 4 activities also, Department of Post, we have few exemptions. So previously lot of activities of Department of Post was exempted, only few activities were taxable. Now exactly opposite it has become. So postcard, inland letter and envelopes with less than 10 grams, which is practically irrelevant in today's scenario, is only exempted. Got it? No idiot will be sending postcard with the advent of SMS. And inland letter I have seen only Life Insurance Corporation. This insurance premium reminders they will be sending. Then envelopes with less than 10 grams. Less than 10 grams, what can be sent here? So one paper only can be sent in an envelope less than 10 grams. Even invitation card will be more than 10 grams here. One small invitation card you take. So that will be easily more than 10 grams and all. So I don't know why they have given. Instead they can omit this, say that entirely Department of Post is taxable. Okay. So these 3 are only exempted. All other activities of Department of Post is taxable. What are the examples for that? Speed post, express parcel post, insurance services, saving schemes, money order and book post, registered post. All those activities including the Aadhaar enrollments. So they will do Aadhaar enrollments na, and even they will accept the bills also. Lot of utility bills, government bills and all, you can make payment in the post office, for which they collect some amount. All those activities of Department of Post will be taxable. So tell me, what are the 3 activities of Department of Post which is exempted? Postcard, inland letter and envelopes with less than 10 grams. Then transportation of goods or passengers, we have a next discussion, that is transportation chart. So there we will see. Then services to aircraft or vessel by airport or port. So airport or port providing services to whom they will provide, to the airlines or to the shipping companies. Whatever money that they are collecting will become taxable. We don't have any exemption. Then services provided to business entities, we have specific exemptions, general exemptions, and in other cases it will be taxable. And what are the specific exemptions that we have? So 14 specific exemptions we have. Okay. So charges under Right to Information Act. Thereafter interdepartmental service, one department to another department of government. Then telecom spectrum allocated before when? 1/4/2016. What is exempted? Both one-time charges and annual royalty. Then right to use natural resources allotted before 1/4/2016. What is exempted? Only one-time charges. Right to use natural resources to individual farmer, it can be assigned any time and entire amount will be exempted. Merchant overtime charges is collected by the customs department because they will be working after office hours and on holidays. That merchant overtime charges is exempted. Then safety certificate charges for giving the safety certificate to establishments is also exempted. Consideration for tolerating an act, example, that is liquidated damages for breach of contract, is exempted. Then share of profit petroleum, which is earned by the government because of assigning the right to extract petroleum, crude or natural gas, is exempted. Then registration charges under any law for the time being in force. Then fee for birth certificate, death certificate, driving license, visa or passport. Then guarantee commission. So whenever government guarantees a loan taken by PSUs, they get a guarantee commission, that is exempted. Then excess royalty collection contractors are appointed for the purpose of swapping fixed royalty against variable royalty. So to the extent of variable royalty, ERCC is not required to pay GST because on that variable royalty already leaseholder will be paying GST. Then fee for granting national permit. So permit charges for transporting between 2 states, etc. That permit charge is exempted. Now tell me, what are the 2 general exemptions that we have? Services other than what? Renting of immovable property. Provided to whom? Provided to a business entity. And that business entity turnover during the previous year should be how much? Does not exceed threshold limit. So then that service will become exempted. But this exemption is not applicable in which case? renting of immovable property. Then second general exemption is what? If services are provided to business entity where value of supply does not exceed 5,000 rupees. Is this exemption applicable for renting also? Yes. Now, wherever it is taxable, that is services provided by government to business entity is taxable, who will pay GST? Generally business entity only will pay GST, but only in one case it will be coming under FCM. What is that? Renting of immovable property to unregistered business entity, government will pay. What about Department of Post? Is it FCM or RCM? Always FCM. What about airport or port services? Always FCM. What about transportation? Always FCM. Only services provided by government to business entity only will come under RCM. So that is the discussion which I have given here. Then generally this Air Force mess will be providing some accommodation services to the personnel. Okay, even the same way police force mess also will be providing accommodation and food to their personnel. Whether this activity is coming under anywhere taxable? No. Because Air Force mess and police mess, when they provide services to their personnel, it is not Department of Post, it is not transportation of goods or passengers, it is not airport or port services, it is not services to business entities. So it will be services, other services. All other services are either exempted from supply or excluded from supply. Consequently, this Air Force mess or police mess which is collecting money from their personnel, employees, etc., will that be covered under GST or excluded from supply? Excluded from supply, even you can write it as covered under exemption. Okay, this is the latest circular amended for November 23 exam. Then services provided to government we are going to discuss. So far what we have seen is services provided by government. Now we are going to discuss service provided to government. Generally, government is required to do certain functions as per Article 243G or 243W of the Constitution. For example, laying down roads is the job of the government. But will the government do that job? No. They will outsource it to one contractor. Now that contractor will be providing services by way of laying down road to government. Is this activity taxable or exempted is what we are analyzing now. Okay. So if that is a pure service, it is exempted. What is the meaning of a pure service? They should not be supplying any material. They should be supplying only service. Then it will be exempted. If it is a composite supply of goods and services, so laying down road is actually a composite supply of goods and services. They provide the goods element. What is a goods element? The tar and the stones which are used will be coming under goods element. And what is the service element? Laying down roads is the service element. Now, in this case, what is the value of goods? Definitely it exceeds 25% of the total, or it does not exceed 25% of the total. Out of the total contract value, the goods element is greater than 25% or less than or equals to 25%. Definitely greater than, because major material only in a cost is. So in the laying down road, the material cost is only high. Therefore, it will not be exempted. Whereas, if it is sanitization of streets during, even now also, so where yeah? Kozhikoda, because of Nipah virus, so they are doing this spraying and all, okay. So they spray that and they put fire in wells and all to kill bats. So these are known as sanitation services, okay. So these sanitation services provided will involve both goods element and service element. What is the goods element? The chemicals which is used will come under goods element, and the service is the work that they are doing. So therefore here definitely the chemicals will not be more than 25%, it is less only. So that activity will become exempted. So see this. Services provided by any person to government with respect to functions entrusted under Article 243G or 243W of the Constitution. Pure services are exempted. Even composite supply of goods or service is also exempted. When? If the value of goods does not exceed 25% of the total value. And there is one CBIC circular in this regard. Generally in North India and all, in ration shops, that is public distribution system, they will be selling wheat flour. So in South, they will be giving rice, whereas in North, they will be giving wheat flour in the ration shops. So therefore, the state governments will be procuring the wheat flour. In this wheat flour, what is the goods element? Wheat is the goods element, and wheat flour, crushing it into wheat flour and processing it is coming under service element. Definitely the goods element is more than 25% of the total or not? Yes. So because ancillary, crushing is only ancillary, therefore the said activity will be taxable. That is the circular. See that. Composite supply of service by way of milling of wheat into wheat flour along with fortification by any person to state government for distribution of such wheat flour under public distribution system is not eligible for exemption. Why? Because the value of goods involved is greater than 25%. Then next exemption is any training program for which greater than or equals to 75% of the total expenditure is borne by central government, state government or union territory. Example, I know about Tamil Nadu, so I am talking about Tamil Nadu government. Tamil Nadu government, what it will do for the purpose of providing NEET coaching to the below poverty line students and all, they will pay fees to the coaching centers. So there is a below poverty line student or a minority student and who is economically weak, they cannot afford to pay lakhs and lakhs of fees for NEET coaching. Usually NEET coaching and all is mandatory to become a doctor, and 1 lakh to 1.5 lakh will be the fees. So these people cannot afford that. So that's where what government will do, government will pay some fees and the students will pay some fees. Okay. So now in this case, the training program will be exempted. How much should be paid by government so that the training program is exempted? Greater than or equals to 75%. Suppose if government has paid 80% and the student paid 20%, whether the entire training program is exempted or only the amount collected from government is exempted? Entire training program is exempted. Sir, anyhow it is education which is exempted. No, these are coaching centers. So private coaching centers. Then what if government is bearing 70% and 30% is borne by the student? Then in that case, whether the training program will be taxable or exempted? Taxable. So the exemption is available only if the training program were greater than or equals to 75% of the expenditure is borne by government. Then services provided by any institutions or NGOs under the central scheme of scholarship for students with disabilities, where the total expenditure is borne by the government. So what is the difference between above point and this point? This is normal training program, but this is training program for students with disabilities. So in the normal training program, how much should be borne by government? Greater than or equals to 75%, then the training program is exempted. Whereas in the second case, how much should be borne by government? Entire expenditure, then only the training program is exempted. So these are about services provided to government. Okay. Now we are looking into renting services. So renting of property can be divided into two: renting of movable property and renting of immovable property. In case of renting of movable property, we have 4 exemptions. That is also related to motor vehicles. What are the 4 points? Hiring of a motor vehicle that can carry more than 12 passengers to a state road transport undertaking. Number 2, hiring of electric vehicle that can carry more than 12 passengers to a local authority. And then hiring of motor vehicle that can carry goods to a goods transport agency, and hiring of motor vehicle to a person who is providing transportation service to education institution. Which education institution? Category 1, that is up to 12th standard. These are the 4 renting of motor vehicles which is exempted. Any other renting of movable property will be taxable. Okay. For example, so for here I came now for taking classes for you. So what happens is that last time when I came, so they gave one room for me, okay, in one hotel, and from there to here I have to come by walk. Here for eating food also there is no faculty room or staff room etc. and all. So I have to go there by walk, eat and come. It was so irritating, afternoon going by walk and all. Okay. So what I did this time, so I took one 2-wheeler on rental basis. So per day 500 rupees. So, and I have to put the fuel and I can use anywhere I can go. So therefore, I took one 2-wheeler on rental basis. So this 2-wheeler I am paying 500 rupees per day. Is it taxable or exempted? Taxable. Why it will be taxable? 2-wheeler is a movable property, and is it covered anywhere in these 4 points? No. So therefore, the said activity will become taxable. You understood or not? Then if it is renting of immovable property. Renting of immovable property again divide into two, land and building. So in case of land, what is the exempted? That is, I am giving land on lease. That to what lease? Long term lease. What is long term lease usually? Lease for a period greater than or equals to 30 years is known as long term lease of land. In this long term lease of land, we will be collecting some upfront charges. That is not annual royalty or annual rentals. Upfront charges for giving the land on lease. Upfront some amount will be collected. Thereafter, after usage of that, some amount will be collected every year. So not the annual amounts. They are talking about which amount is exempted. Upfront amount is exempted. Upfront charges including preferential location charges. What is preferential location charges means? Generally to get the land which is near to highway or roadside etc. we need to pay some extra amount, that is known as preferential location charges. But what is the type of lease? It is long term lease of what? Industrial plots or plots for development of infrastructure for finance business. So what type of land is given on lease? Industrial plots or plots for development of infrastructure for finance business. By whom it is given? By SIDCO, State Government Industrial Development Corporation. You would have heard this, SIDCO, State Government Industrial Development Corporation. So that SIDCO will own some industrial land. That industrial land will be given on lease to whom? To the factories. So what should be that lease? Long-term lease. What is the period? Greater than or equals to 30 years. Now they get some upfront amount. That upfront amount will be exempted. Then in case of building, what is exempted? Tell me. Already we know that renting of residential property for residential purpose to whom? To an unregistered person is exempted. Also one more point. Renting of residential property for residential purpose to a registered individual for his family stay is also exempted. So this is the amendment. Renting to a registered individual for their family stay is treated as renting to unregistered person and it is exempted. Then next renting is renting of the precincts of religious place meant for general public registered as a trust. Okay. For example, we have this Sabrimala temple, okay, that will be coming under one trust, religious trust, Travancore Devaswam Board, okay. So that is a religious trust. So this trust owns the temple and the precincts of the temple. Can there be a private hotel there? On the top of the hill, can there be a private hotel? Impossible. Private hotel you cannot start. So it is all the premises belongs to that temple only, that is a trust only. Now for what purpose? The precincts of the temple will be given on rent. For what purpose? Three purposes, either for accommodation or for conducting any function or for the purpose of shops, correct? And for accommodation, if per day it is less than 1000 rupees, it is exempted. Greater than or equals to 1000 will be entirely taxable. Same way for hall, okay, for marriage function or any other function and all. So per day less than 10,000 will become exempted. Greater than or equals to 10,000 will be entirely taxable. Then for shops, shops should be how much per month? Less than 10,000 per month it is exempted. Greater than or equals to 10,000 per month will be entirely taxable. Now what I did, I have one marriage hall. In that marriage hall, I constructed one temple and that marriage hall I am giving on rent and I am telling, so precincts of religious place meant for general public given on rent, so the rent is exempted. Can I tell that way? It may be religious place for me but not for general public, okay. So it should be a religious place for general public and that should be registered as a trust and its precinct should be given on rental basis, then only this exemption will be available. Then in case where the motor vehicles, renting of motor vehicles is taxable, we have RCM. What are the three conditions for RCM? Supplier should be other than body corporate, recipient should be body corporate and rate of GST should be 5%. If all these three conditions are satisfied, liability to pay GST is on recipient. Any other renting will be coming under FCM. Then look into this sports related services. In this sports related services, there are two exemptions. So exemption number 1 is related to sponsorship. Exemption number 2 is related to services provided to the recognized sports body and unrecognized sports body. Now we are talking about the first part, that is sponsorship services by recognized or unrecognized sports body. Already we know that any sponsorship amount collected by a recognized sports body will be exempted. What is considered as a recognized sports body? Total 6 people are considered as recognized sports body. Who are they? National Sports Federation, Inter-University Sports Board, Paralympic Committee, Indian Olympic Association, Central Civil Services Sports Board and Panchayat Sports Board. These are the 6 recognized sports bodies. If they collect any sponsorship amount, that will be taxable or exempted? Exempted. Now, I am taking example of BCCI for recognized sports body and IPL for unrecognized sports body. Sir, why IPL is unrecognized sports body? Because IPL is not coming under National Sports Federation. Then what is the role of BCCI? BCCI will administer the sport, but IPL board is only owning the IPL. So it is not BCCI which owns the IPL. Due to that reason, IPL tournaments and all will not be coming under National Sports Federation. So it is not coming under recognized sporting event. Now, this BCCI gets the sponsorship money from Tata, a body corporate or a firm. Okay, will it be taxable or exempted? Exempted. And they get the sponsorship money from me, THARUN'S Brainery, sole proprietor. Whether it will be taxable or exempted? Exempted. Why will I give sponsorship? So for example, now we may grow to that next level also and we may give, okay, example only I am telling, basically it will be body corporates or firms, sole proprietors and all will not be giving sponsorships. Reason being, there is no brand identity for sole proprietorships. Usually partnership and firms only will be registering that particular brand, okay. So that's why 99% of the cases, the sponsorship amount will be given by body corporate or firm. Rarely it will be sole proprietor, but let it be body corporate or firm or sole proprietor, the sponsorship money collected by recognized sports body will be exempted. Then the example for unrecognized sports body is IPL. Now, if they collect sponsorship money from body corporate or firm, it will be taxable under RCM. Because in case of sponsorship services, if the recipient is body corporate or firm, it will be taxable under RCM. If the recipient is other than body corporate or firm, it will be taxable under FCM. Suppose if IPL gets sponsorship money from a sole proprietor, it will be taxable under FCM, where liability to pay GST is on the supplier. You understood this part yet? Clear or not? So in sponsorship services, who is the supplier, who is the recipient? The one who is organizing the event is the supplier and the one who is paying the sponsorship money is the recipient. That is the first part in this. Then the second part in this is services provided to recognized sports body or unrecognized sports body. So if services are provided by individual as a player, referee, umpire, coach or team manager, that too to recognized sports body, it will be exempted. All other cases it will be taxable. So who are the 5 people? Player, referee, umpire, coach, team manager, that will become exempted. Suppose if these people provide services to IPL board, then it will be taxable. Now, apart from these people, any others, who are others involved? If you take cricket match, who are the others in cricket match apart from these 5? Curators, commentators, technical experts, selectors, etc. So these people services will always be taxable, whether they provide service to a recognized sports body or unrecognized sports body. For example, say you take an umpire who is receiving money from BCCI will be taxable or exempted. There is an umpire who is umpiring a cricket tournament and BCCI is paying money to him. Taxable or exempted? Exempted. If you take IPL matches, IPL umpires and all will be getting money from Mumbai Indians team. So whether it will be taxable or exempted? Taxable, because whichever match it may be, Mumbai Indians team only will pay money to them. Umpires otherwise they will be begging only. So if not Mumbai Indians team. So therefore Mumbai Indians team is so good that they pay lakhs and lakhs of money to the umpires, so that even if it is out also not out. Okay. So therefore this money received by umpires will be taxable or exempted? Definitely taxable. We should tax that. You understood or not? So it will be taxable. Then that is about this 2 points. Next, one more exemption is there. Services provided by one recognized sports body to another recognized sports body is exempted. So what is this? Generally, if inter-university sports board is conducting a cricket event and they wanted this cricket tournament to be conducted in international standard, so they receive the services of BCCI. You got it? BCCI is providing the services to inter-university sports board for conducting a cricket tournament in international standard, for which BCCI will collect some money from inter-university sports board, that is one recognized sports body to another recognized sports body, which will be exempted. That is this point. Service provided by one recognized sports body to another recognized sports body is exempted. Then look into the next one. Services by an unincorporated body or a non-profit entity to its members. There is an unincorporated association. That unincorporated association is providing services to its members and they collect some money from the members. That money collected by them will be exempted if that association is a trade union. What is a trade union? Association of traders is known as a trade union. Usually all relevant people who are into similar trade, they will form an association. Example, all jewelry shops in Kerala will have an association. So what they will do, suppose, because if you see, Kerala is the hub for entire jewelry across the South India. Okay, if at all in South India jewelry business needs to happen, that's only because of Kerala people. You take Jayalukas, Josalukas, Malabar Gold and Kalyan Jewelers, everyone is from Kerala only. Why? Simple logic. Kerala and Middle East is very much connected. You all know that the gold is cheap in Middle East and from there easily it will come to Kerala. And if it goes to any other place, in the name of baggage duty, 38.5% will be levied. Kerala, our Kerala only, we can manage. So therefore, it will come and from here only, lot of sales will be happening. Now, central government will be coming for a raid to Jayalukas or Josalukas businesses and all. Now, what will happen? This Kerala Jewelers Association will go to Finance Minister and say, see madam, 2024 elections are coming, you need our support or not? Of course, many suitcases are required. So therefore, fine. So whatever, raid and all will not happen. You understood or not? If not this government, some other government, till the time this jewelry association is there, they can't do anything to this jewelry association. Everyone knows that smuggling is happening. Everyone knows that lot of illegal gold is coming, but who can do anything? On that one movie also we make Lucifer like that. Then also no one will be bothered about that. You understood? Why? Because under the ground many things are happening there. You got it? So therefore, services by this trade union, association of traders who will be collecting money from the traders. So the moment you want to become part of that association, there are many benefits if you are part of that association. See, not only this gold merchant association, we have every business association. So all coaching centers also will have an association. They will decide how much fees we will keep. We will keep 1.5 lakh NEET coaching fees. You also keep same fees, I will also keep same fees, so that there is no price war. Okay, and let's loot the students. Like that only almost all coaching centers are. Are you understanding this? So therefore, these associations are for the purpose of doing business or taking businesses to the next level. To become part of this association, you need to pay some membership fees. This membership fees, which is collected by the association, will be exempted whatever may be the amount of that membership fees. Understood or not? Then next point. Suppose if that association is providing exempted services, Anyhow, any person providing exempt service is exempted, even if association providing the exempted services to its members also exempted. For example, this COVID testing, usually during lockdown what happened, generally COVID testing is exempted because COVID testing will come under diagnosis. So therefore it will be exempted, no need to pay GST on that. But of course charges are there for COVID testing, you know that? COVID testing, the collected charges, that swab test, one stick they will send inside your mouth and nose and they will test. So that swab testing and all will be chargeable, and on that there is no GST, okay, because it is exempted, it will come under diagnosis. During lockdown what happened, many apartment owners association conducted this COVID test for their members of the association who are flat owners. Anyhow, this COVID testing is exempted. If it is done by the association to its members also exempted, because that service itself is exempted. You understood? Then I know in some apartments what they do, they generate the electricity using solar power. That too in Kerala only I have seen that. So what they do is that on the top, like some 10 floors, 20 floors building will be there. On the top they will put solar panels. Kerala is known for that. How to extract energy from solar. See Cochin airport, so entire airport is running with solar energy only. I don't know with this climate what will happen, but you know, solar energy we are dependent on here. So therefore what happens, on the apartment full on the top they will put the solar panels, generate the electricity, and whenever there is power cut, so using this electricity they will be supplying it to the flat owners, and they bill some amount for that also. Whether this will be taxable or exempted, generally electricity is exempted. If it is provided by association to its members also exempted. Are you understanding this? Then a resident welfare association, that is generally resident welfare association, that is apartment owners association, will be providing services to its members. Many facilities will be provided. Common area maintenance like lift maintenance, garden, security, then water supply, power supply, like that lot of services will be provided. And in return, how they will be collecting charges? Maintenance charges. If the maintenance charges does not exceed 7,500 per member per month, actually it is on a higher side. Maintenance charges and all will be hardly 1,000 rupees, 1,500 rupees, like that only. But 7,500 rupees means it's like a gated community. Inside that apartment itself, everything will be there. Cinema, theater, gym, and even swimming pool, everything will be there. Then only this much amount will be collected. Then only it will be taxable. Okay. Usually normal maintenance charges and all will be in the range of 1,500, 2,000, that way only. That is always exempted because it does not exceed 7,500 rupees per month per member. Then there is a industrial or agricultural labor association. What is industrial labor association? So again you might be seeing this, wherein all factory workers so will be forming as a association, worker union. And what this worker union will do, whenever the employer is not paying properly wages, our worker union will go for hartal, strike, and therefore they will fight against the employer to get the proper amount. So that is called as a labor union. So industrial or agricultural labor union, and to become member in that union you have to pay some membership fees. That membership fees collected by them is exempted. This is trade union and this is labor union. Both are exempted, whatever may be the amount. Apart from this, any other association, if they collect amount which does not exceed 1,000 rupees per member per annum, then it will be exempted. Okay. For example, say we created one association called as POSCA, Protection of Students of Chartered Accountancy Association. Okay. For what purpose? In order to fight for the rights of chartered accountancy students. Is there an association for you? No. You don't have any association. So that's the reason why you are treated like bonded labor. Okay. So wherein you will not be provided with proper leaves and proper working hours is not there, and therefore you need an association. Only when we get an association we can fight, correct or not? But individually you are having fear. Why you are having fear? Because what if your registration number they note and they purposively make you fail in the exam? This kind of stupid fears and all you are having. So that's the reason why individually you don't want to fight. So therefore we will create one association. But this association need to fight against CA Institute. means we need to appoint one advocate and all. For that advocate fees we need to pay. That's why membership fees you need to pay. How much membership fees? 500 rupees. Okay. So 500 rupees you are paying. Taxable or exempted? Exempted. Any other entity for promotion of trade, commerce or industry up to 1000 rupees per member per annum is exempted. It is per annum, not per month. Whereas here 7500 is per month. Okay. Then, so you guys have association anywhere in Kerala for CA students? Sikasa. That is one chincha for ICI only. They do everything in favor to ICI only. Where from you guys will be fighting for students? Name only Students Association. You guys will never fight for the sake of students. Okay. You will always be supporting to president, chairman, etc. and all. Where you guys will do a good thing for students. Then, for no association, I think. I have not seen, I have not come across. If you create any association, 1 lakh donation from my side, okay? So, say this, transportation of passengers following are exempted. So, with respect to transportation of passengers, so we have certain exemptions. So, these are the two charts that we have, transportation of passengers and transportation of goods. Look into this transportation of passengers chart. In case of railways, we have two exemptions. What is that? Totally the transportation of passengers is divided into railways, airways, waterways and roadways. Railways we have two exemptions, that is any class other than first class or any AC will be exempted. So what will be taxable? AC will be taxable. AC can be first class AC, second class AC, 3-tier or chair car, all AC compartments will be taxable. Even first class AC or non-AC will be taxable. First class AC, okay. What is non-AC? In local trains, there will be first class non-AC. So that will also be taxable. So the moment it is first class or any AC, it will be taxable. All other transportation will be exempted. All other transportation means what? General tickets or sleeper class or second class sittings, etc. that will become exempted. Then metro, mono and tramway is also exempted. So metro and mono can be AC or non-AC, okay. Metro, mono and tramway, because metro will not be part of Indian Railways. Metro will be covered under a separate board, okay. So therefore, what is metro you already know. Monorail is what? Bullet trains. That is a single track will be there. On the track the train will go. That is monorail. And tramway is like the track that will be laid down on the road itself. In Calcutta it is there. That is called as tramway. This is also exempted, whatever may be the case. So what are the two exemptions for railways? Any class other than first class or any AC coach. Then second exemption, metro, mono and tramway. Then in case of airways, we have two exemptions. If the starting point of the passenger or ending point of the passenger's journey is in northeastern states or Bagdogra in West Bengal, that ticket is also exempted. So what is northeastern states? Manipur, Mizoram, Tripura, Nagaland, Assam, Sikkim, Arunachal Pradesh and Meghalaya. You remember this with a keyword MMTN ASAM. Already you know MMTN. What is MMTN? Manipur, Mizoram, Tripura, Nagaland. ASAM. A for Arunachal Pradesh or Assam. Anything you keep. Either Arunachal Pradesh or Assam. Because another A is also there. Both Arunachal Pradesh and Assam is covered here. S for Sikkim and M for Meghalaya. So these 8 states will be coming under northeastern states as well as Bagdogra in West Bengal. If the starting point or ending point of the journey is in this place, the ticket will be exempted, and the journey should be in economy class, then only it will be exempted. Say for example, you want to go from Kochi to Dubai. How much could be the cost, flight cost from Kochi to Dubai? 50,000? Let's take 50,000 rupees for example. Now you are booking 2 tickets. Kochi to northeastern states or Bagdogra. That ticket will be exempted from GST. Why? Because the ending point is in this place. Again another ticket from that place to Dubai, that ticket also exempted because the starting point is in that place. So without paying GST at all, you can complete the journey. Only thing you need to check the connecting flights here. So So if you have a connecting flight, definitely you can make the travel. Actually, lot of people used to go by this option previously, because previously this exemption was given even for business class also. But now this exemption is only for economy class, not for the business class. Then second exemption is consideration as viability gap funding for a period of 3 years. Viability gap funding refers to a scenario where there are a lot of regional airports in India and not every airport is becoming functionable. So, a lot of airports are today being sold. So, for that reason, what government is telling is that if an airline is operating in that particular airport at a fixed rate, okay, so the remaining amount will be paid by the government. For example, let's take a situation, there will be one regional connectivity airport like in Kerala. Any other airport you have? Trivandrum, one airport is there, big airport. Okay, some small airport. Kannur, one airport is there. Now, Kannur to this Chennai, let's take Kannur to Chennai. What could be the ticket cost? 3,000 rupees. No one will travel. Why no one will travel? Train is available at a cheaper rate. 800 rupees, they will get second class and all. So why they will be going by flight? But if it is 1,500, will the people think about it? Definitely yes. Because there is a saving in time. In 45 minutes or 1 hour, they can complete the journey to Chennai. So therefore, they will be thinking about if it is 1,500. But if the flight is operated at 1,500, it is lost for the airlines. Maybe their variable cost itself will be 2,500 rupees. How they can operate at 1,500 rupees? Now government is telling, don't worry, we will give you 1,000 rupees. So 1,500 they get from the passenger, 1,000 rupees they get from government. So now because of this, what will happen? Lot of people will start using that airport. When lot of people start using that airport, so means the rent will be collected by the airport from the airlines. So therefore, initially they are losing the money, but in the form of rental income, they will be able to generate. That's the reason why government came out with this plan of viability gap funding. So every airlines who are operating in this regional connectivity airport, part consideration they get from the people and part consideration they get from the government. So which is exempted? That consideration which is received from the government is exempted. Consideration as viability gap funding for a period of 3 years. That too, for how many years this exemption will be available? 3 years. Means the viability gap funding is for 3 years? No. The viability gap funding can be for 5 years or 10 years or 20 years also. But the exemption is only for a period of 3 years. So for the first 3 years, money received from passenger will be, first 3 years, money received from the passenger will be taxable. Money received from government will be exempted. After 3 years, money received from passenger taxable, money received from government also taxable, because the exemption is only for a period of 3 years. Then waterways. In case of waterways, inland waterways is exempted. What is inland waterways means? That is rivers. In the rivers itself, the people will be transported. That is known as inland waterways. Transportation of passengers in inland waterways is fully exempted. Okay. It can be public transportation or it can be for tourism purpose also. For example, in Kerala, there are many villages which are even now not connected through roads. So they will be traveling through boats only. So this will be called as inland waterways, so which is for public transportation. Even the same can be used for tourism purposes also. Example, Karnataka state has got one biggest river called as Kaveri river. So that Kaveri river, they will be using for the purpose of tourism and all. So whether that will be exempted? Yes. Public transportation or tourism, inland waterways will be exempted. Then next, coastal waters. What is the difference between inland waters and coastal waters? Coastal waters means seaways. Coastal waters within India for other than tourism purpose is only exempted. For example, from Chennai to Andaman and Nicobar Island, there is a cruise ship which will be transporting the people on a daily basis. And this particular transportation is in coastal waters, seaways. Is it for tourism purpose or public transportation? Public transportation, because a lot of people are staying in Andaman and Nicobar. This will be coming under exemption. Suppose in Kanyakumari, there is one Vivekananda rock, okay, there is one stone, okay, and from the shore to that rock, people will be transported in boats. Even many places, even in Kerala also, there could be some backwaters. So wherein from the shore to the small island, the people will be transported. So this will be mainly for what purpose? Tourism purpose. So that will be taxable. So because other than tourism purpose is only exempted. Then roadways. In case of roadways, we have 3 exemptions. Non-AC stage carriage. What is a stage carriage? Stage carriage is a local bus that transports the people and stops at every stage of its journey is known as stage carriage. But which type of stage carriage is exempted? Non-AC stage carriage. And then non-AC contract carriage. What is the difference between a stage carriage and a contract carriage? Stage carriage will stop at every stage of its journey, but contract carriage is like point to point travel. That is, if it is starting from Cochin, it will stop in Bengaluru. If it starts in Cochin, it will go to Chennai. So like that point to point travel is known as contract carriage. So stage carriage AC will be taxable, non-AC is exempted. Same way contract carriage divided into 2, AC, non-AC. AC will be always taxable. Non-AC contract carriage is exempted. That too when? If it is other than for hire or tourism. If it is a non-AC contract carriage for hire or tourism, then also it will become taxable. For example, you wanted to take a bus on rent. Say yours is a very big family with some 40 people and you want to go for one family function. So when you need to go for some family function, at least 10 cars are required. So instead you can take one bus on rent and you can take the entire battalion so to family function. So this is called as contract carriage given on hire. So the charges collected will be taxable even though it is non-AC. Another example, tourism purposes. There will be some package tours they will operate now. That is government bus or a private bus operators, they will operate a package tour like Munnar, Wayanad tour. So they will pick the passenger, they will take it to that place, do the sightseeing, complete the journey and they will drop the passenger from where they pick. This is known as package tour. So even though it is a non-AC contract carriage, but it is used for what purpose? Tourism. Therefore, it will be coming under taxable. Suppose if it is other than hire or tourism, it will be exempted. What is other than hire or tourism? Public transportation, then it is exempted. Then metered cabs or auto rickshaws is also exempted. But if these 3, that is non-AC stage carriage, non-AC contract carriage other than for hire or tourism, metered cab or auto rickshaw is through e-commerce operator, then it will become taxable. With effect from 1/1/2022, exemption not available if these services are provided through e-commerce operator. Example, normal auto, you pay 100 rupees, exempted. Same 100 rupees, you book through Ola Auto, Uber Auto, etc., chargeable to GST. You understood? Because if these services are through e-commerce operator, it will automatically be chargeable to GST. And who will pay GST on that? E-commerce operator. Why? HATE. T is what? Transportation of passengers through e-commerce operator, any motor vehicle. So liability to pay GST is on e-commerce operator. So this chart is with respect to transportation of passenger service. Look into the next chart that is related to transportation of goods. In case of transportation of goods, first same 4 modes, railways, airways, waterways and roadways. In case of railways, specified goods is exempted. What are the specified goods? The same specified goods which we have seen for GTA. So what are the 6 specified goods that we have seen? That is agricultural produce, food grains including flours and pulses, milk and salt, organic manure, newspapers and magazines, relief materials, defense equipments. So these are the 6 specified goods. Even if it is transported by railways, it is exempted. Even if it is transported through waterways, coastal waters within India also exempted. So in 3 modes, these specified goods transported will be exempted. What are the 3 modes? You can see there, GTA and then railways and then coastal waters within India. In these 3 places, transportation of specified goods is exempted. Then, in case of railways, any other transportation of goods will be taxable. Then, airways. In case of airways, only one exemption. that is transportation of goods from where to where? Outside India to India, that is exempted. Then waterways, we have two exemptions. Inland waterways always exempted. Like how transportation of passengers through inland waterways is exempted, same way transportation of goods through inland waterways is exempted. And coastal waters within India. Coastal waters means what? One port to another port in India, but specified goods is only exempted, other goods will be taxable. Then in case of roadways, other than GTA or courier agency will be exempted. So only GTA or courier agency will be taxable. Normally, we will be booking some Tata Ace, etc. for transporting goods or luggage from one location to another location. It will be taxable or exempted. Even when you book a big lorry for transporting the goods from one location to another location, it will be exempted. Only if it is a GTA or a courier agency, it will be taxable. What is a GTA? That is any person engaged in transportation of goods by road and issues a consignment note by whatever name called. Means basically, if you are booking the entire lorry, it will not come under GTA. It will be normal transportation. Whatever freight that they collect will become exempted. Suppose if they transport goods belonging to multiple consignors to multiple consignees, so then they will be issuing consignment note and they collect freight from each and every person for the parcel, that will become taxable. You understood or not? So therefore, other than GTA or courier agency will be exempted. Then, so here previously we had one exemption. Transportation of goods from India to outside India by waterways and by airways was previously exempted. Now that exemption is withdrawn. You can see that note. Transportation of goods by waterways from outside India to India is always taxable. Also with effect from 1/10/2022, transportation of goods by airways and waterways from India to outside India is taxable. So right now we have only one exemption. What is that? Transportation of goods by which mode? Airways. From where to where? Outside India to India is only exempted. All others will be taxable. See, in the international context, either we may take goods from India to outside India, or we may bring goods from outside India to India. By what mode? Either by airways or by waterways. Everything will be taxable. Only one place it is exempted. What is that? Transportation of goods by airways. That too from where to where? Outside India to India. For that we pay some freight. That freight alone will be exempted. All other freights will be taxable. Then in case of GTA services, only 3 exemptions. What are they? Specified goods. So that 6 specified goods, and that is agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, defense or military equipment, relief material for natural and man-made disasters. Then second exemption is if recipient is government registered only to deduct TDS, or recipient is individual HF, AJP or unregistered and not having factory. And previously we had these 2 exemptions, it is now omitted, that is 1500 and 750 freight. So that is now omitted, means it will be taxable. Then GTA is having 2 options. Either they can opt to pay GST under FCM or they can opt to pay GST under RCM. But they need to access this option during a financial year. If they opt to pay GST under FCM, again they have 2 options. Either they can pay GST at 12% or at 5%. 12% will be with ITC, 5% will be without ITC. Previously, the moment they used to give 5% in the question, we used to interpret that it is always RCM. But now you cannot interpret that way. Why? Because 5% is there even under FCM also. So we don't know whether it is RCM or FCM. That should be given in the question. What if, sir, question is silent? Primarily the liability is RCM. Only if GTA opts to pay GST, it will come under FCM. So if question is silent, you take RCM. If the question clearly says they opted to pay GST under FCM, then only it will be FCM. Okay, previously we used to decide based on 5%, now you cannot do that way. Same way, the moment they gave 12%, always it will be FCM. Why? Because 12% rate is only under FCM option. So you check what is the rate given in the question. Suppose GTA service taxable at 12% like that given, means it will be FCM. So who will pay GST? GTA only will pay GST. You got it? Recipient will not pay. Suppose if they give 5% and the question is silent, RCM. If they give 5% and specifically says that GTA opted to pay GST, then only it will be FCM. And when GTA should select this option during a financial year, and that option selected will be remaining throughout that financial year. Then there is one CBSE circular related to hiring of vehicles for transportation of their employees to and from the work. Will it be coming under non-AC? This is non-AC. Will it come under non-AC contract carriage for hire, and the same will be taxable? Because if you remember, we made a discussion, contract carriage divided into two, AC, non-AC. AC will be always taxable. Non-AC will be again divided into two. For hire or tourism, taxable, and public transportation is exempted. Now what happened here? Corporates usually take the contract carriages on rental basis. They take the contract carriages on rental basis. For what purpose? To drop their employees at home and to pick the employees from home to the office. Will it come under contract carriage for hire or not? For that, CBSE gave a superb clarification. Whether the vehicle is under the control of the corporates or only for a particular trip are they receiving the services. Understood? Whether the vehicle is completely under the control of the corporate or for a particular trip they are receiving the services. If for a particular trip, like predefined schedule, daily morning you need to pick my employee here and drop in the office, again evening you need to pick my employee, drop back in home. A predefined schedule means it is not contract carriage on hire. It will be coming under others, so therefore it will become exempted. Is it clear or not? If the bus is under the complete control of the corporate throughout the day and they can use it for any purpose, then they can change the route, they can send it for vacation, all the employees, anything they can do with respect to that bus, then it will be coming under hire, then only it will be taxable. Hiring of vehicles for transportation of their employees to and from work falls under services by way of transporting of passenger by non-AC contract carriage for hire, and the same will be taxable. Hire refers to hired for a period of time during which the contract carriage is at the disposal of the service recipient. You understood or not? What if it is only for a particular trip or a particular route? Then it will be coming under hire? No, that will not be coming under hire. Are you understanding here? Just now I said here, if the bus is completely under their control throughout the day, they can use it for any purpose, then it will be coming under what category? Contract carriage on hire. Therefore, it will be taxable. Suppose for only a particular route or a trip, predetermined schedule or a predetermined trip if they take, that will not come under hire, that will come under regular contract carriage, which is other than for hire or tourism, which will become exempted. Okay, this point actually I expected in the last attempt. It was an amendment for May 23. They did not test it. Definitely November 23 you will come across this point. Then amount collected for transportation of passengers in a private ferry in coastal waters. So in case of transportation of passengers in waterways, what are the 2 points that we have seen as exemption? Inland waters will be always exempted, and coastal waters, again coastal waters divided into two. For tourism purpose, it will be taxable. Public transport, it will be exempted. What is the meaning of public transport? Public transport does not mean operated by government. It can be government or private, but they should be transporting home general public, then it will be exempted. You got it? So CBSE gave a clarification stating that public transportation should not be interpreted that it should be only transported by government. So usually public sector undertakings means we say government na, so that is not the intention here. So that transportation can be by government or private. Amount collected for transportation of passengers in a private ferry in coastal waters falls under public transportation of passengers in a vessel and it is exempted. However, if it is for tourism purpose, then it will become taxable. Then the next area is import of services. Import of services is divided into two: OIDR services and other than OIDR services. What is the meaning of OIDR services? Online information database access or retrieval. That is, any service which is mediated through internet and it is automated is known as OIDR services. So this import of service is very important for November 23 exam, because from May 24 onwards completely this position has changed. Okay, so therefore this will be the last attempt where you will be learning this. So May 24 there is a huge amendment that has happened in this. So therefore definitely they can be testing for November 23. So OIDR services means what? A service which is mediated through internet and it will be automated is called as OIDR services. Example: Amazon Prime, Netflix, online interactive games, etc. Whether online classes will come under OIDR services? No, because even though it requires internet, but it is not automated. That's the reason why online classes will not come under OIDR services. And if it is a OIDR service, always it will be taxable. So who will pay GST? Depends. If it is imported by a non-taxable online recipient, supplier will pay GST under FCM. If it is by other than non-taxable online recipient, so recipient only will pay GST under RCM. Who is this non-taxable online recipient? So you can see below, any unregistered person who is importing service for purpose other than business or commerce. Other than business or commerce means what? Personal purpose. Then they will be called as non-taxable online recipient. In that case, who will pay GST? The supplier located outside India will pay GST. That is, it is coming under FCM. Understood or not? And any other registered person and all will be coming under other than non-taxable online recipient. They will pay GST under RCM. Suppose if it is import of other than OIDR services, that is health consultancy or any legal consultancy, technology services, software services, etc. Then import of other than OIDR services by non-taxable recipient or other than non-taxable recipient, you need to see. Who is a non-taxable recipient? Three people will come under non-taxable recipient, that is individual, trust and government. Individual is importing for what purpose? Personal purpose. Trust is importing for what purpose? Charitable activities. Then government is importing for what purpose? Other than business or commerce. And individual should be unregistered, government can be registered or unregistered, and trust can be registered or unregistered. They will come under non-taxable recipient. When you need to apply NTR and when you need to apply NTOR, what is extra? What is extra? O. So what is O? OIDR. So only when there is OIDR you should apply NTOR, and other than OIDR you need to apply NTR. So non-taxable recipient, if other than OIDR imported by non-taxable recipient, then it will be exempted. If it is by other than non-taxable recipient, it will be taxable under RCM. Then wherever GST is payable under RCM, they need to compulsorily register and pay GST. And here every supplier also who is providing services, OIDR service from outside India, is also compulsorily required to get registered in India and pay the GST. Even though they don't have any place of business in India, they should be registered in India and pay GST because they are making services to non-taxable online recipient. Then next area what we have is construction services. This construction services basically is for pure labor contract. First point you see, construction of an individual house irrespective of the floor area or cost is exempted. What does it mean? Say you are constructing you want one individual house to be constructed. You have a very big land, and in this land you wanted me to construct an individual house, and I buy the material required for construction. I do the construction for you and collect some amount from you. Is it taxable or exempted? Taxable. Why taxable? Because I am not doing only pure labor contract. I am also supplying the material. Suppose if you buy all the material required for construction, you give it to me. My job is only to do the construction and I collected some amount. This will become exempted. So construction of an individual house, only labor contract, not a works contract. This is not applicable to works contract. This is only a labor contract. What is the meaning of an individual house? House occupied by a single family is known as individual house. So there is one house of Mukesh Ambani, Antilla in Mumbai. One big house is there, 28 floors that house is, okay. And that particular house will come under individual house or not? Yes. Why? Because it is occupied by a single family. A house which is occupied by a single family is called as an individual house. How do we know it is occupied by single family or not? Single kitchen. For the entire house, if there is a single kitchen, in that house, one floor fully is kitchen only, okay. So single kitchen only. So therefore, it will be coming under individual house. Suppose ground floor, first floor, ground floor one kitchen, first floor one kitchen, will it be called as an individual house? No, it will become complex and this exemption is not applicable. This exemption is applicable only if it is a individual house, irrespective of the floor area or cost involved. Got it? It can be 30 crores also your construction cost exempted. Why exempted? Until the time it is an individual house and the service provider provides only construction services. Simple, easily we can evade. That is, the builder will buy all the material in the name of the client. Got it? Automatically, he provides only construction services where he is buying the material. So therefore, literally he buys only the material, but the bill is in whose name? Client's name. So he collects the money for construction services. So definitely it will become exempted. Okay. Then next, second exemption, you see, what is the difference between the first point and the second point? In the second, not only construction but also repair, alteration and renovation. But for which type of construction? For the project covered under Housing for All Mission or Pradhan Mantri Awas Yojana. These are government projects. Housing for All Mission, Pradhan Mantri Awas Yojana is government project. For these government projects, if you provide either construction service or repair or alteration, it will be exempted. Suppose, if I provide repair service in relation to repairs of an individual house, is it taxable or exempted? Repairs to an individual house, is it taxable or exempted? Taxable. Why? Because only construction of individual house is exempted. So repairs of individual house will become taxable. Then third point, you see, 1/3 of the gross value of flat is exempted towards land or undivided share of land. Generally, when you buy a flat, you also pay for the land which is below that flat. So usually we call that as UDS, undivided share of land. Now say for example, one 3 BHK flat is 75 lakhs. In that 75 lakhs, you pay not only for the flat but also the share of undivided land. Now in that case, whether on entire 75 lakhs GST is payable? No. 1/3 will be reduced towards UDS because sale of land is excluded from supply. So land should not be charged to GST. Due to that reason, out of the gross amount, what is the gross amount here? 75 lakhs. In that 75 lakhs, how much should be assumed to be land value? 1/3. That is 25 lakhs, and remaining 50 lakhs will be taken as a value for payment of GST. What if land value is separately available? Even then we will follow the same thing. For example, land value 50 lakhs, construction cost is 40 lakhs. So what is the gross amount? 90 lakhs. Land value how much? 50. Construction cost is how much? 40. So 50 plus 40, 90. But how much will be exemption that is available? 1/3. So 90 into 1/3 is what? 30 lakhs. So means 90 minus 30 is only exempted. Remaining 60 lakhs will be chargeable to GST. Whether the land value is shown separately or not shown separately, always how much will be the exemption towards the land that we get when you buy a flat? 1/3 towards the gross value of the flat. Then in exam what will happen? Sometimes they will be giving the rates like this. Usually on sale of residential flats, we have GST, we have two types of GST rates. If it is affordable housing, or non-affordable housing. non-affordable housing. If it is affordable housing, the rate of GST is 1.5% without ITC. And if it is non-affordable housing, the rate of GST is 7.5% without ITC. This rates you don't have to remember. It will be given in the question itself. And what is affordable housing, what is non-affordable housing, also you don't have in syllabus. So you don't have to learn that. But why this information is relevant? What happens is that they will tell value of flat is 50 lakhs and applicable GST, okay, value of flat is 75 lakhs and applicable GST is 5%, like that they will give in the question. Now in this case, what you will do, you will take 75 lakhs minus 1/3, 75 lakhs minus 1/3, what is that? 1/3, that is 25 lakhs. 75 lakhs minus 25 lakhs, what is the balance? 50 lakhs. On that 50 lakhs, you will multiply GST 50 lakhs into 5%. 50 lakhs into 5% is how much? 2,50,000. So this is wrong. You should not do this way. Why you should not do this way? The moment they gave 5%, already they reduced 1/3. How they reduced 1/3? What is the rate of GST? 7.5. 7.5 minus 1/3 is what? 5%. So when they give 5%, how much will be the GST? Directly you take 75 lakhs into 5%. That is how much? 75 lakhs into 5%. 3,75,000 is the correct answer. So therefore, whenever they give 5%, already 1/3 has been reduced from the rate itself, because the original rate was what? 7.5. From 7.5 itself, 1/3 has been reduced. So 5% is given, means directly you take on the value of the flat, 75 lakhs into 5%, 3,75,000. Suppose if it is given as value of flat is 75 lakhs and applicable GST is 7.5%, like that. If it is given in the question, then what you will do? Then you will take the normal way. What is that? 75 lakhs minus 1/3. What is 1/3? That is 25 lakhs. 75 lakhs minus 25 lakhs, the balance will be 50 lakhs. On that 50 lakhs, you will compute the GST payable. So what is the GST? GST is 50 lakhs into 7.5%, same, 3,75,000. 7.5%, 3,75,000. So the answer will not change. And the answer will be always 3,75,000 only. So depending upon what is the rate that is given. If 5% is given, directly multiply. Suppose if 7.5% is given, then reduce 1/3 and do the calculation. Okay. So depending upon what rate is given in the question, accordingly you need to modify the way in which you are arriving at the answer of GST liability. Then that is this 1/3 of the gross value of flat is exempted towards land or undivided share of land when the gross value includes value of land. Then this transfer of development rights. So whenever there is TDR, FSI and long-term lease, we have an exemption. What is that exemption? Proportionate to what is exempted? Come on. Residential units booked before completion certificate or first occupation, whichever is earlier, divided by total floor area in the project. First you need to see what is the value of inward supply. Always this TDR, FSI long-term lease is taxable at what rate? 18%. So 10 lakhs into 18%, 1,80,000. On that, how much will be exempted? See the carpet area of residential units booked before completion certificate divided by total carpet area. That much is exempted and remaining will be taxable. Then GST is applicable on annuities paid for construction of road. That is, what happens is that generally toll charges is exempted. What is the meaning of toll charges? Whenever government is required to lay down a road, but they don't have money to lay down the road. Why they don't have money? Maybe they constructed so statues or buildings, etc. and all. So they don't have money to lay down road for general public. Then what they will do? They will give the land to the builders, private contractors. That private contractors like L&T, etc. they will lay down the road, and they invested in laying down road. In turn, they will be recovering it from the public who is using that road. That is known as toll charges. Actually, toll charges is like recovery of investment. That's why toll charges is exempted. Now we have one latest amendment for November 23 exam, that is toll charges by way of annuity is exempted. So what happens in case of annuity? Rather than paying every time to use it, so government will be paying some yearly charges, because they will also be using that road, government buses and all using that road. So they pay some annuity charges on a yearly basis. That annuity charges previously was exempted, now it is omitted. Consequently, whether the annuity charges collected by the developer, land developer or road developer from the government will be taxable or exempted, now it will be taxable. So see this, GST is applicable on annuities paid for construction of road, where certain portion of the consideration is received upfront while remaining payment is made through deferred payment, that is annuity spread over years. We'll start. See this, advocate services, we have two exemptions, that is services provided by individual advocate other than senior advocate or firm of advocates. So in this, total 4 points, 4 exemptions are there. If they provide services to a person other than business entity, that is exempted. Second, if they provide service to another advocate or firm of advocate, it is exempted. Third, if they provide service to central government, state government, local authority, it is exempted. 4, if they provide services to a business entity whose turnover does not exceed threshold limit during the previous year, then also it will be exempted. In all other cases, it will be taxable under RCM. Whereas in case of a senior advocate and arbitrator, we have only 3 exemptions. That is, if they provide service to a business entity, that is exempted, that is other than business entity. If they provide service to government, it is exempted. If they provide service to a business entity whose turnover during previous year does not exceed threshold limit, it is exempted. In other cases, it will be taxable under RCM. So advocate services and arbitrator services will be either exempted or will be taxable under RCM, where liability to pay GST is on the recipient. Also here, if the senior advocate is providing service to another individual advocate or firm of advocate, who should be taken as the recipient? The ultimate litigant or applicant or petitioner shall be deemed to be recipient, and we need to see based on that. If they are individual, exempted. If they are government, exempted. If they are business entity whose turnover during previous year does not exceed threshold limit, exempted. Then next we have exemptions under IGST Act. That is, if both supplier of service and recipient of service is outside India, there is no GST. Only in one case we have GST. What is that? Transportation of goods by vessel from outside India to India. Even that is now omitted because of the Supreme Court judgment, correct? Both supplier of service and recipient of service is located outside India. Even though its financial impact may be in India, but all services are exempted. However, this exemption is not applicable in case of transportation of goods by vessel from outside India to India. Then who will pay GST in such case? Importer of such goods is liable to pay GST. But this point is omitted now. This point is omitted by Supreme Court, omitted by Supreme Court in Mohit Minerals case. Mohit Minerals case, which means it is held unconstitutional and GST not payable. So therefore, what you need to remember is that if both supplier of service and recipient of service are located outside India, whatever may be the transaction, on that transaction there is no GST. We don't have to pay GST on the transaction. That is what you need to remember at present. Then next, second point. Services provided by a tour operator. There is an Indian tour operator, and this Indian tour operator is providing tour operator services to a foreign tourist, and in relation to the tour conducted wholly outside India. So tour operator is in India, and the recipient to whom they are providing tour operator service is outside India, and where the tour is held completely outside India, then it will be exempted. Why won't it become export of service? Because tour operator service is an intermediary services. For intermediary services, the location of supplier will be taken as the place of supply. So tour operator is in India, consequently place of supply also India, and to become export of service, where the place of supply should be outside India. That's why this is not an export of service, but here the service is completely happening outside India, so they want to give exemption to this. That's why this exemption is given. Tour operator service is intermediary service, and the place of supply is location of supplier. Even though location of supplier and place of supply in India, in this case the said service is exempted. What if Indian tour operator is providing tour operator service to a foreign tourist in relation to the tour which is wholly in India? Will it be taxable or exempted? Taxable. Only if the tour is completely outside India, the exemption will be available. What if the tour is partly in India, partly outside India? There is an Indian tour operator providing tour operator service to a foreign tourist, and the tour is partly in India, partly outside India. We have one exemption in that case. Service provided by a tour operator to a foreign tourist in relation to a tour conducted partly in India, partly outside India, we will get the exemption. To what extent we will get the exemption? To the extent of tour conducted outside India. So, see the exemption: total consideration into number of days tour conducted outside India divided by total number of days, or total consideration into 50%, whichever is lower will be exempted. For example, if the total consideration is 1 lakh and the number of days the tour conducted outside India is 4 days out of 6 days. So 1 lakh into 4 by 6, how much? 1 lakh into 4 by 6, 66,667. So 66,667 is exempted? No. Or 1 lakh into 50%. What is 1 lakh into 50%? That will be 50,000. Whichever is lower. Which is lower? 50,000 is only exempted. Got it? What if instead of 4 by 6, if it is 2 by 6? Suppose 1 lakh is the total amount. 2 days is the tour conducted outside India. So 1 lakh into 2 by 6 will be how much? 33,333, or 1 lakh into 50%, that equals to 50,000. Whichever is lower. Which is lower? 33,333. So this 33,333 will be taken as the exemption. You understood or not? So whichever is lower will be taken as exemption. So 33,333 will be taken as exemption in this case. So that is the meaning here. Total consideration into number of days outside India divided by total number of days, or total consideration into 50%, whichever is lower. Now, suppose if the tour is conducted for 3 days, 5 hours, how we should take it? Suppose if the time spent is less than 12 hours, you consider it as half day. If the time spent is greater than or equals to 12 hours, you consider it as full day. So in this example, what I told you, the tour conducted outside India is 3 days, 5 hours. 3 days, 5 hours. Now, what should be taken here? 3.5 should be taken in the numerator. You understood or not? And tour in India is say 6 days, 2 hours. 6 days, 2 hours, tour in India. Then what is that fraction you will be taking? 3.5 and 6.5. Correct or not? 3.5 plus 6.5, that will be 10. So 3.5 divided by 10 will be taken as the exemption. Okay. So 3.5 tour outside India and 6.5 will be tour in India. So 3.5 plus 6.5 will be 10. So therefore, how much will be the exemption? Total consideration into 3.5 divided by 10, or Total consideration into 50%, whichever is lower will be taken. That is this. Then services provided by a intermediary when both location of supplier and recipient of goods is outside India. So what is this? What is the difference between first point and fourth point? In the first point, supplier of service is outside India, recipient of service outside India, no GST on that. In this case, supplier of goods is outside India, recipient of goods also outside India, but these two people are connected through one intermediary. That intermediary is in India, he get a commission. On that commission, this intermediary is not required to pay GST because he is engaged in the transaction outside India to outside India. There is one commission agent between them. So the commission agent will get a commission that is exempted. That is this fourth point. Then miscellaneous exempted services, transfer of a going concern as a whole or independent part thereof is exempted. That is, whenever I transfer the business as a going concern, whatever may be the amount that is received will become exemption. Recently, Jaipur International Airport has been leased for 50 years by Airport Authority of India to Adani Group, and whatever money that is received will be exempted from GST, not chargeable to GST, because this business is transferred as a going concern, as a whole or independent part thereof. So entire amount received will become exempted. Then next, supply of services associated with transit cargo to Nepal and Bhutan. Nepal and Bhutan are landlocked countries. So any goods which are taken to Nepal and Bhutan is known as transit cargo to Nepal and Bhutan. For that, any service you provided, loading, unloading, transportation, warehousing, that service will be exempted. Not only to Nepal and Bhutan, but also from Nepal and Bhutan is covered under this exemption. Both to and from covered in the exemption as per CBIC circular if the cargo container returns empty. Then what if the cargo container is not returning empty but carrying some goods? That charges will be taxable. So usually when we take the vehicle from one location to another location, when it is required to return empty, they collect charges even for that return journey also. That amount will be exempted. Suppose if they take the vehicle from India to Nepal and Bhutan and they collected some charges, on the return journey from Nepal and Bhutan, we loaded some goods and brought, whether that freight charges will be taxable? Yes. Then services to Nepal and Bhutan will be exempted. To Nepal and Bhutan exempted, but from Nepal and Bhutan will be taxable when if they carry some goods and they collect charges for that. If they are not carrying any goods and if the vehicle is returning empty, then for that some charges collected, that will become exempted. Then service by way of collecting or providing news by independent journalists, Press Trust of India or United News of India. These independent journalists will not be associated with any newspapers or news channels. They are like freelancers who will be getting money from newspapers and news agencies when they sell the news to them. This money earned by independent journalists will be exempted. Same way, Press Trust of India, United News of India, PTI and UNI, they are news dissemination services they do, like broadcasting. Like you have some news to be given to all the newspapers and news channels. You go to PTI or UNI, you give the information there, news there. They will be distributing it to all the newspapers. They are like aggregator kind of. And these people will collect some money for disseminating the news to news agencies. So that money collected by PTI and UNI will be exempted. So next time when you are reading newspaper, you will be seeing a news article. In that source, they will give PTI, UNI, like that they will be giving. What is that? Basically, they did not get the news. The newspaper did not go and collect the news. This news they got from this Press Trust of India or United News of India. Then services of public libraries by way of lending books, publications or any other knowledge enhancing content or material. Public libraries basically give the books on rental basis and collect some money. That will become exempted, but it should be a public library. What if it is a private library? Then the charges will be taxable unless it is exempted any other place. For example, Institute of Chartered Accountants of India is having a library. In that library, we can take the books on rental basis and we can pay the rental charges. Is that rental charges collected by public library or private library? Private library, because that institute premises is accessible only to the students of ICI. So it's a private library. So therefore it will be taxable or exempted. It is exempted under a different place. Any service provided by an education institution to its students, faculty and staff. What if it is a British Council library? British Council library again is a private library. You need to take membership in that library, and whatever lending fee that they are collecting will be taxable or exempted. Taxable, because we don't have any other exemption with respect to that. Okay, it's because it's a private library. Only if it is a public library, the lending fee collected by them is exempted. Then service by an organizer. So he is organizing a business exhibition. Where the business exhibition is held? Outside India. So there is a person who is organizing a business exhibition and providing services to a brand name owner by way of promoting their brand. Okay. Now where the exhibition is held? Outside India, it will indirectly encourage exports. Due to that reason, this activity is exempted. So services by an organizer to any person. Where this organizer is located? India. Where this any person is located? India. But why this transaction is exempted? Because the exhibition is held outside India. That's why it is exempted. What if the exhibition is held in India? Will the charges collected by the organizer will be taxable? Yes. Then service by way of public conveniences such as provision of facilities of bathroom, washroom, lavatories, urinal or toilet. So pay and use toilets are there na? 5 rupees, 10 rupees or 2 rupees that we pay for using the toilet. So that 2 rupees, 5 rupees collected is exempted from GST. Thank God, on that they did not levy. Then service by way of access to road or bridge on payment of toll charges. So already I explained that toll charges is exempted. Not only toll charges, even overloading charges at toll plazas is also exempted. Generally, some lorries will be carrying heavy loads and all and will be carrying in the roads like highways, toll gates. So at that time, they have to pay some overloading charges. That is also part and parcel of toll charges which is exempted. Sometimes vehicles will not have FASTag. Because they are not having FASTag, they have to pay some extra toll charges. Even the higher toll charges for not having FASTag is also exempted. So what and all exempted under toll charges? Normal toll charges, overloading toll charges, even extra charges for not having FASTag. But previously we had this exemption, payment of toll charges by way of annuity, but now it is omitted. Then next point, services by a performance artist. Who is called as a performance artist? One who performs before the audience is known as a performance artist. Means they should not be performing before the camera. In what genre they should be performing? Folk or classical art form of what? Music, dance or theatre. There is a Bharatanatyam dancer or there is a Mohiniyattam dancer. So they are performing in a stage show and getting some consideration. That consideration is exempted because this dance is an art form and it is a classical and they are performing before the audience. And the consideration should not exceed 1,50,000 per performance. Then it will be exempted. What if the consideration exceeds 1,50,000? Entirely it will be taxable. Also, this exemption is not applicable if they are performing the dance to promote a brand. So, means not for recreation purpose, but for promotion of a brand. Means in a product event or a brand event, they are performing. Whatever money that they receive, that will be taxable because they are performing as a brand ambassador. Then next, services by way of, this already we saw in education services itself, training or recreation. Training or coaching in recreational activities relating to arts or culture. So by whom? Only by a individual. And sports by a charitable trust is exempted. Then satellite launch services. Satellite launch service at present is provided by only 3 people in India. ISRO, New Space India Limited, Antrix Corporation. This New Space India Limited and Antrix Corporation are subsidiaries of ISRO only, and these people are only providing satellite launch service. So you can remember simply, satellite launch service is exempted. Okay, these are the various exemptions that we have with respect to GST.